Hi everyone, welcome to the webinar. We've got a really good one. I've put in a whole load of new slides into this one because I've got some of the latest data out of Goldman Sachs in terms of the market for the year ahead. So I'm going to just start. I'm going to kick off straight away, okay? If I'm looking away from you, it's because I'm looking at the other screens. I'm going to show you some live trades. I've added about another 6. We've got about 20 different trades I'm going to show you, including a really good one on, which one did I just add? Platinum. Most people don't look at. I've added Disney. We've got gold. We're going to look at Bitcoin again, DAX, Euro dollar, Sterling, Dow, Canadian dollar, Apple, FTSE 100, and the forecast for the year ahead. Okay, so let me know that you can see and hear me clearly, please, because then I will begin. Let me also know where you're from. Okay, it's always good to know where people are from. We get it a bit interactive. One of the things I want to do, and this has been in the news, is ask people polls. Okay, so I'm going to ask your opinions on things, and then we're going to share it on the market view. Like I said, I've got 1, 2, 3, 4, 8. Well, yeah, I've got a whole bundle of new companies that I want to share with you that we're going to be looking at. Okay, so I'll show you that in a second, and let's just get on with the slides. I mean, like I said, I've got so much to cover that I don't want to waste any of your time at all, my friends. Okay, so here we go. Here we go. Here we go. Here we go. Great. Okay, so this is the summary slides of all the things we're going to cover. Let's start off with the very first one. Okay, 2019 resolution. We're going to make more money trading. I don't know if you're loss making. 79% of private investors are loss making. Well, they've not been on one of my webinars, have they? Okay, so we're going to start the year with a resolution. That's me on the BBC Brexit brokers progress. Oh, no progress. We're going to have to deal with that as well for 2019. But listen, we have got our resolution for the year. Hithan saying you can't say anything on the screen. Should be on there. Let everybody just let me know that you can actually see the screen as well, please. Please just let me know that you can indeed see the screen as well, will you? So that I know everybody's here and that they can see the screen and they're not just, I'm not just talking to myself. Watch to the end. I'm going to make sure everybody gets my list of brokers that I like and use. Also ebooks, infograms, videos, all of these links I'm going to give you right at the end. It's a little Christmas present from me. Thank you, Gordon. You can see it right about so that you've got, you know, like I said, something to go away with. So watch to the end. It's a motivational thing. My gym instructors are the same with me. He goes, do a strong session and you can have a chocolate bar, right? Now, we're also going to deal with several massive lies when it comes to trading. No one ever went broke taking profits. It's a huge lie about trading. So I'm going to show you trading strategies which will ensure that we don't take our profits too early. How do we do it in a professional manner? Another massive lie is, oh, the way people make money in trading is they make a few big bets. No, it's not. It's exactly the opposite. Okay, it is not the case that when you're certain you just bet big in like you do in poker. That's not how they make money. We actually toe dip in, and the people who, I don't know if you can see me in a little web camera window on the screen at the moment, but in case you can, the people who taught me that were 10 of the world's leading traders who I interviewed for my first book 20 years ago. Some of you might have heard this before. 20 years ago, I wanted to meet the world's leading traders because I thought if I'm going to trade for a living, I better meet these people because it's a life-changing decision to say that you're going to trade for a living. How can you meet them? I thought I'll approach the Financial Times to publish a book of my meetings with them. We called it Mind of a Trader, Lessons in Trading Strategy. And so what I did is they became mentors. And one of the things I expected them to say is, oh, Alpesh, we became rich because what we did is we took big bets. We're just cleverer than everyone else. We could foresee things and we took big bets. They didn't, not one of them. And if you don't believe me, I mean, don't buy the book. I'm going to give you all the best bits of the book in this webinar. But you know, I couldn't believe it. And it was published by the Financial Times, published in my Financial Times columns as well. So, you know, it's out there. It's not just that you got to take my word for it. Actually, what they used to do is toe dip small amounts and then build those trades up. Who knew? Who knew? Because they could have said, oh, we just go all in. So I'm going to give you the nitty gritty specifics of trading strategies which work. And really important, look, being rich is about profit divided by time. It's about your return on time invested. We need to cut the time to be profitable. And that's also what this webinar is about. It's about cutting the time in front of the computer screen, cutting the time to be profitable. Okay. Very important thing. My hedge fund, my asset management company is authorized and regulated by the Financial Conduct Authority. What all that important information says over there that you see on screen is essentially, I'm going to show you some live trades. What it's saying is don't just remortgage your house whilst we're on the webinar and plow all your life savings into any trades I show you. Okay, so it's just telling you to be bloody sensible, please. One of the things, by the way, we're short on at the moment is Disney. I'm not too far from Disney's headquarters. We're based out of Mayfair. Disney's in Hammersmith. Just so you know, they're on the. We'll come back to some of these trades later. The red arrow, whenever you see that on this webinar, it means to go short. Okay, and I'm going to come up with more of the trades we're looking at later in this webinar, right? But that's just what the important information says over there. Our offices are main offices are in Mayfair. This is us. I wish I owned that whole building. I don't. 84 Brook Street. Pop by if you're ever there. Near Claridge's, near where the old US Embassy used to be. We have an office in Luxembourg, very small one, because our funds are domiciled over there. See what happens with Brexit, and a small one in Singapore because we also have a private equity fund. None of that matters to you. Our bankers are Rothschilds, auditors for the hedge fund are Ernst & Young, and the lawyers are Allen & Overy, in case anybody's interested on this sort of institutional side of how these things work. Oh, and just so you know, like I said, wish we owned the whole building. We have a little room there. There's 4 of us based out of London. Tiny little room. We pay £15,000 rent a month. All right. People always like to know the inside stuff. I don't mind telling you. Like I said, wish I owned the building. Couldn't afford a building in Mayfair. You're rubbish, Alpesh. Right. These are the reasons most people give for being here. Okay. Just so you know, I appreciate that. I know why people are here. It's because they want to earn a side income. Well, I find December is the best month of all because they've got a bit of extra time to learn. And they are highly motivated. Why are they highly motivated? Well, guess what? They see the Christmas spending, and of course, it's the time you start making your resolutions for the new year. So it's a good time to say, I'm going to learn a little extra skill. I'm going to trade on the side with very small amounts or a demo account to make sure I've learned the skills. Our target, by the way, my friends, okay, is going to be very small baby steps because we don't want to lose money, do we? So we're going to start with baby steps, right? We're going to try and see if we can learn the skills to earn £500 a month or $500 a month, right? Now, some months you might make more, some months you make less. There's no guarantees in trading, right? It's not like a salary, right? The months you make more, you keep for the months you make less. So you try and iron out the ups and downs. So you average 500 a month. The reason is trading is an entrepreneurial skill business. All right, it's a business, it's entrepreneurial, it's skill-based. If you can learn the skills to make 500, then your only problem with trading is how to scale up, i.e. how to get friends and family to give you more money. So if you've got the skills to make 500, you've got the skills to make 1,000. You've got the skills to make 1,000, you've got the skills to make 2,000. The reason we start slow, it's a bit like the same reason you learn to drive a car in a car park, all right? So it's safe. You don't learn on the motorway. So safety first, safety first. And why safety first? Look at that screen. If you're trying to earn extra income for those reasons, to pay down a mortgage, child's mortgage, pension top-up, rent, or child's education, you don't want to start big because while you're learning a skill, because if you were to lose some money, guess what? You're going to send yourself backwards, not forwards. That's why caution is always the first thing. And also I've learned people learn better when they're less stressed. And they're less stressed if they're not risking too much. And then they can gradually, through baby steps, increase those amounts and become more skilled and make the money. Okay, nobody's going to turn the markets off, so don't worry. You don't have to be in a massive, crazy rush. I want you to know that when it comes to this. Quick checklist. Please do this. Close the doors. Make sure it's perfectly quiet. No TV. Please focus on this as a one-to-one tutorial as if you're at university. Right? Make sure nobody's using the broadband except you, because otherwise the webinar will block you out. It's just, you know, these things are streamed. Grab some water and a notepad. At the top of the notepad, I want you to write down making money, because in 2 months, when you look at that notepad, if it says webinar December 2018, you'll tear it up and won't bother. And the reason I say that is one of the mentors who was in my book, David Kite, one of the people who taught me how to trade like a professional, he's in the UK rich list. He said, we're here to make money. When I interviewed him, he said, we're here to make money. He's one of the leading traders of the world whose strategies we're going to look at and we're going to copy as I copied. And by the way, any strategies I'm going to tell you today, I only copied them from those traders who were in my book. I didn't invent them. I wish I had invented them. I didn't. You know, I'm not Isaac Newton or Albert Einstein. I'm just the guy who copies what they did and learns from it. That's all. And to be perfectly honest, that's fine. 99.9% of people who are successful stood on the shoulders of giants. They just copied other people who were successful. Very few are Nobel Prize winners. Very few are Isaac Newtons, all right? And I've got no problem with that. I'm going to also, big promise, straight talking as ever. That's me with my team outside Downing Street. I wish I could give you inside information on Brexit. All I mean is we're going to give you straight talking, the same straight talking you see me on the BBC, Bloomberg, CNBC give, all right? And what I'm also going to do is show you how we're trading profitably for 2019, which is very different to anything I've seen over the last decade. The world has changed too much. I'm going to give you the best bits of information from my Financial Times columns, right? My 200 columns, my Diary of an Internet Trader columns. You can see it there, Diary of an Internet Trader columns in the FT, the best bits of those, and the best bits of information that I give and insights I have on Brexit that I've shared, where I put my neck on the block. We get 300 million viewers for this program on BBC, right? 300 million people see me put my neck on the block. So I really have to concentrate and make sure I'm getting things accurately right. And I'll show you and give you the best bits of that as well in this webinar. So I hope that's enough and a lot of information. If that's just the introduction, let's get right into the meat of it, my friends. Let's get into it. This is from Bloomberg. The S&P, the US markets, right? It's been their worst month. December has been the worst month for about 10 years since the credit crunch. It's been the worst month, right? Now, that tells me something. That tells me I do not just want to say, oh, you know what? I'll put my money in a fund which will invest just in the stock market for next year, because I don't know if the stock market's going to go up or down. We got to be more active. We want to be more proactive than that. We might be down 10% next year. All right. So I need to be able to trade and make a bit of money, a little bit every day or every week and every month to get that 500 a month. Okay. Or 1,000 a month that we're targeting, because just buying stocks and leaving them for a year, I don't know if I'm going to get a return. Right, especially given what this December's been like if you only bought stocks, which is also why one of the ways we've been making money, where's it gone? Disney, right? You see those stocks falling? Great. So we've made money out of it, because that red arrow means to sell short. That means we sold high, we sold at that price, and we're going to buy it back. I'll tell you when. It's not signaled us to buy it back yet, but buy it back cheaper. Remember, if you buy low, sell high, or you sell high, buy low, it's the same thing. You're making profits. And that's what we're trying to do. So we want to be in a position, so do you, for 2019 to profit from falls. Okay, profit from falls. And you don't just want to be buying a long only a fund, because your pension's probably in a long only fund. And I think in 2019, as I'm going to show you, there's a danger it could get well screwed. However, this is other data which says the S&P 500, so the US markets, stock bargains based on analyst profit forecasts. Well, actually, some of you might know what the price earnings growth ratio is, the PEG ratio. It's a measure of how undervalued companies are. So this is going back over 10 years. That's where we are. The ratio is at some of the lowest level it's been for about 10 years. The price earnings ratio, which is another measure of valuation, isn't. It's sort of middle of the road a bit, isn't it? Could easily fall, but the PEG can't really fall much. In other words, the growth in earnings that these companies have suggests that they're relatively undervalued. Now, this is going to be the problem with 2019. You're going to have on one side the possibility of things being awful, on the other side, things being an absolute possible rally. And I'll give you a classic example of this. This is from Bloomberg. The percentage of stocks making new 52-week lows on the New York Stock Exchange has skyrocketed. Well, does that mean that the market's going to continue lower, or does it mean, no, we've flattened out? If you've got a record, rather, of companies which have made a one-year low, hey, maybe it's a great time to buy, right? So this is where we've got this indecision. We've got this problem of, well, which way do we go? And by the way, when it comes to Brexit, 57% of you think it's going to be a hard Brexit. Please tell me no. All right, let me reset that poll and give you the other one, which is, okay, this. Will the Dow be higher by the end of 2019? Like I'm telling you, at the moment, it's a difficult one to call. I actually think it will. I think it will. And I'll tell you why in a second, right? This is, again, the S&P 500 2-month, what's called peak to trough drawdowns. In other words, the highest it's been over any rolling 2-month period, right down to the lowest. All right. And we've had a pretty big, sharp fall. Now, it's not the sharpest fall we've had over December, because we've had a few other drops like this, and we're used to them, really, to be honest. Since, what, the last 10 years, we're used to these sharp falls, but it's comparable to some of those. What does that tell us? Well, to one sense, it tells us don't be panicked by these falls. You see what I'm saying? Can read it either way. In another sense, it tells us, oh my God, we should be bending over, grabbing our ankles. Now, here's one which is why I'm a little bit positive. This is, again, the forward price earnings multiple. It's by Goldman Sachs, okay, Global Investment Research. These are kind of things that come through my desk. Came through last week. The Standard & Poor's valuation under their 3 scenarios. So this is the US markets. So where we are at the moment, all right, the price to earnings ratio is a measure of the valuation of companies. If companies go up to 18 times, which is what they peaked at this year in 2018, guess what? The S&P hits its all-time high again. If they stay, which is what Goldman Sachs' base case is at where they are now, the market will just move a little bit upwards. And if they go down to the kinds of levels they easily can, which is 14, you'll see another sharp sell-off and we'll lose probably another 15, 20% off the markets. Guess what? Goldman Sachs have just said, well, on the one hand, this, on the other hand, this, on the other hand, this. When the market's like this, and you know they're giving 3 bloody scenarios, you can see it on screen there. Is it going to go high, low, middle, whatever? That's when I want to turn even more so to trading. 2019 is not going to be like 2018, where it was just you go on the valuations, you'll be fine. All right, you won't lose too much. 2019 is going to be like this, where you're going to want to be shorting equities, or you're going to say to yourselves, you know what? I really want to be trading euro dollar, for instance. Okay, why do you want to be trading euro dollar? Well, because euro is going to be in the news, so is dollar as always. Green arrow means to buy. I'll explain how we get those signals later. Okay, from our strategies, green arrow, buy, and then we had the red arrow to sell, which is where we are now. We're still short on euro dollar 1 hour bars, so we'll see what happens. By the way, notice on a 1 hour bar, you get a signal about every 3 days, which is great if you've got a day job. People think, oh, I've got a day job, I should get a daily. Watch the daily bars. No, you watch the 1 hour bars because you get a signal every 3 days. If you watch the daily bars, you get a signal every bloody week or 2 weeks. What's the point? Okay, so part of my point in this is we need to know the strategies which will tell us when to buy, the strategies which will tell us when to sell, the strategies which tell us to start small because we're going to add to our winners. See that red dotted line? That means adding to our positions. So we gradually increase our profits. As we get more and more profits, we reinvest them to make even more. And the strategy which will tell us our stop loss, SL, which will be somewhere up here, and how to go long and how to go short, because that's going to have to be the kind of market we're going to be playing in. Speaking of which, platinum, it's also probably going to be the kind of market like this, where 1 second you're rallying up, we've pulled back, we've come back up again. I mean, I know that's sharp. Down, up. We've had some good rises on the platinum. We rarely trade platinum. I think this is only the second time this year I'm showing platinum. But it's doing what it's doing, so it's fine. Okay, and I'll come back to some more of these and how do we ensure we're not screen slaves. We've scanned the screen for 15 minutes a day, find where the trends are just starting, use a bit of computing power, get all this data for free for life. Okay, not be beholden to any one brokerage, and then having done all of that, place those trades and then do something more interesting than being a screen slave all day long. Okay, so those are all the things we're going to cover. Like I said, in terms of the longer term, the 20-month one, 24-month holdings, this is my my algorithms. Everybody who knows me knows that I use algorithms, use software we've created in order to forecast things, look at where things are. So this is based for 24 months, US equities, the highest rated ones. And the algorithm, what it does is it looks through their accounts and it looks for valuation, looks for revenue growth, earnings growth, so profit growth, revenue growth, looks for dividend yields. In terms of valuation, looks at price earnings growth, how quickly earnings are growing, and then weighs these factors and then scores them using a clever bit of artificial intelligence, and then tells us, and it's been doing incredibly well since 2004 when we invented the software on the longer term stocks. So these are the longer term ones. Okay, so just so you want to know what I like for this year, that's this. And I'm going to be on Bloomberg TV, I think next week, in order to talk about some of these picks as well. Now let's get back to trading. Let's get back to trading, okay? Let me tell you what trading is not. With trading, we are not looking at a crystal ball trying to forecast the future because we don't know what the future is. We've got to be instead tactical, that whatever prices give us, we're in a position to manage how we will react to the information we get. Not, oh, I'm cleverer than everyone else. I'm Henry Kissinger. So what I'm going to do is be able to tell you in the future, this is going to happen. This is going to, nobody knows. Look at Brexit. Who the hell knows? Look, will the Dow be high by end of 2019? 83% of you said yes. Fantastic. I mean, I think you're right. I think you're right, because I think the Fed, 4 interest rate rises this year, probably another 2. But I think you're right. I think it's going to be higher. Let me reset that. Now, let me ask you another classic one for 2019. See what you say about this one, my friends, right? We are not trying to forecast and be smarter than everyone else, because it's too difficult to try and be smarter than everyone else. You don't have a bank of analysts behind you, do you? You can see I don't have a bank of analysts behind me. I've got about 3 staff in front of me. I don't have analysts constantly looking at this. And do you want to spend your life reading the Financial Times, The Economist? I've got a master's degree in economics from Oxford University, and I don't try and forecast the future, okay? And we know, if Brexit has taught us anything, we know the Muppets in charge can't forecast the bloody future either. Trading is also not, like I said, a part of that is to say, trying to be an Einstein, trying to be the cleverest person in the room. Because if it was, the PhDs in the world would be the richest people on the planet. Funnily enough, they're not, are they? Okay, very often the richest people in the world are those who left school at 16. I'm going to show you one of those later who I taught to trade, and he's doing rather well. Right? I'll tell you one of the reasons why 2019 has changed and the way you've been trading up till now, and God forbid you've been paying. Yesterday I asked people, how much have you paid for trading courses from people like Greg Secker and Darren Winters, and they came up with numbers like £5,000, £15,000. I couldn't believe it. I said, oh my God. Okay, everything you've been taught with trading is bullshit, and I'll tell you why. This is Stanley Druckenmiller, okay? December 18th, so we're only talking a couple of days ago. This is in Bloomberg. He is one of the legendary hedge fund managers of the world. Algos are robbing the market of trade signals. Let me tell you what he said. Quant funds can obscure what's behind price moves. Volatility is no help because there's no real trend, okay? The trends are getting shorter. So we're going to need to use computing power. And that's one of the reasons we want to use a 1 hour time frame. People like Druckenmiller like to use really long time frames. Want to use a 1 hour for that reason. Billionaire, right? Yeah. So he's proven himself, right? I'm not a billionaire. Listen to a billionaire. Is glad he's no longer in the hedge fund business now that algorithmic and quantitative trading have taken over the markets, right? So before you go along like little sheep to, all these courses and paying 15 grand and thinking to yourself, you're suddenly going to be able to compete with these people, watch this webinar because I'm going to show you how you're going to have to adapt as private investors, getting free. This is free live real-time data. Okay. Getting this and using what you as private investors can do, a little bit of what these algorithmic and quantitative traders are doing. You're not going to be setting up a hedge fund. What you're going to be doing is just using a little bit of the best practices yourselves, using the computing power yourselves, because if you try and do it using the old way, which is, oh, I think I'll draw a trend line. I think I'll do a moving average, Alpesh. Yes. Oh, I got taught about head and shoulders patterns. Trust me, you are so old. You are being left behind and you're risking money and you're going to be dead in the water, okay? And people like me are going to happily just in the markets, and other hedge funds are going to just take the money off you because we're going to hand you your head on a platter, right? You might say, why are you telling us this? Why are you telling us this? You're not my competition. My competition is probably Goldman bloody Sachs. And actually, they're not even competition. What we do is we trade what they're trading. We follow what they've done. That's all we do. Like I said, I'm a copycat. I copy what they've done. I don't try and fight them. All right. But just so you know, and you guys don't get told this stuff. That's the problem. You don't even probably know who Stanley Druckenmiller is. Okay. Now, when he tells you this, I know my industry takes notice, and that's why we're in the hedge fund business. Unlike him, he's really old. He's about 75. Okay. We're in the algorithmic and quantitative trading part of the hedge fund industry. A, because I'm younger. B, because I love technology. Right. So let me tell you what trading is about and how you should be doing it now. Trading is 2 things. Okay. It is 1, looking for fireworks. All right. Where are the fireworks? And somebody's going to light a match and the fireworks are going to go whoosh and go up. Let me explain that in trading terms. It's looking for certain patterns, okay, call it a firework, where if somebody comes along, it's ripe to go up and explode like a rocket. So I don't know who's going to provide the match. It's usually a Goldman Sachs or a JP Morgan who lights the match. And see that green arrow, that tells us to buy. And you notice how it shoots up. So our business is to use computing power, call it algorithms, whatever you want, to look for this, and I'll show you how you can do it manually, okay? But at least you'll be on the right track, even if you're doing it manually. I'll show you how to do it. Looking for this, which you can liken to fireworks, and then who's going to light the match? It's not going to be me or you. We haven't got enough money to light, you know, the Forex market, for instance, is $1 trillion market, $3 trillion daily market. We're not going to light it. What we're going to do is let somebody else light it, and then we're going to ride off them. Do you ever, let me give you an example. Do you ever watch when somebody else has lit some fireworks next door, maybe, or far away? Do you ever watch and think, "Oh, I got a freebie there"? I do. We'll do. That's how we're going to trade. We're going to let somebody else light the firework. Once the market started moving, we're going to ride their coattails, okay? But the first thing we need to know is, where the hell are the fireworks? Where's everything set? So that's for something to go explosively upwards. What about when the market collapses like this, okay? It's going sideways for ages, and then bosh. Okay, or as I put it, the straw that broke the camel's back, right? So where do we find camels? Which, as soon as somebody puts another straw on it, a bit of bad news. You know, sometimes you'll hear newscasters say, oh, the market was looking for an excuse to sell, an excuse to take profits. What they mean is, and they don't even realize they mean it, is they found a camel. See that? That's not a shape of the charts, by the way. It looks like a camel's hump, actually, funnily enough, but it's not a double top. Ignore that. It is just certain patterns. How do we find these patterns? But patterns alone won't do it, because that's still an old-fashioned way. Things evolve, and I'll explain why in a second. So that the market thereafter collapses, we can make our profits. Okay, that's more what trading is like. So that's what we're going to look at. Like I said, we've covered 2 bits. We've covered those 2 bits. Now let's move on to. Oops, let me just. It's done it again. This darn thing, it's called Microsoft. They made this piece of software. Let me just go on to here so you can see me. What we also want to do is look at, when do we buy, when do we sell, and how much can we make. Now, I always tell people we want to be starting with, when somebody new and joins my firm, I tell them to start with as little as $1,000. Okay, and you might say, why the hell do you tell them to start with just $1,000, Alpesh? What's wrong with you? Well, A, because it's my money that they're risking and they're learning off. So I want to make sure that it's not too much. Excuse me while I just set this up. Okay, and also because that way they won't lose too much capital if things don't quite go the way they should. All right, so we're going to see, well, okay, if you start off with 1,000, which seems very small, Alpesh, how are we ever going to get to making serious money, and how much could we make? What's the risk we're going to take if we're starting off with such a small sum? So we're going to do the maths on the business plan of that, okay, as well. And you're going to see that part of it. Now, let me put this screen back on. All right. You know, Microsoft can sell this software, can't they? Right, so now let's look at how to assess trading educators. Now, I'm going to take a little aside here. It's a lot of stuff to read. Let me go through this quickly, because yesterday when I did a webinar, this is the thing I got the most questions of, right? What questions do we ask? That's the first thing. What questions do we ask? And what don't you trust? Now, first question, does any so-called educator charge you more than £1,500? If they do, it's a rip-off. All right, simple. Don't piss around with, oh no, the Alpesh. No, it's a rip-off, all right? They're just profiteering. Do they charge a subscription? If they're charging you a subscription, don't trust them. I hate subscriptions in anything, They're charging you a subscription so they can make a guaranteed income every month, every day, every week, every year, all right? Tell them to piss off if they're charging you a subscription. Are they FCA regulated to manage monies as a fund manager, not as a newsletter writer? Some of them, what they do is they say, oh, I'm FCA regulated. Yeah, to write freaking newsletters, not to manage money. If they're so good, why don't institutions trust them? Okay, why don't institutions give them money, like Aegon or AXA, who are investors in our fund, or sovereign wealth funds who are investors in our hedge fund? Okay, don't trust them just because they say they're a hedge fund. This is a new thing. There's people running around and say, oh, I'm a hedge fund manager. Oh, really? They haven't got the first clue what the hell one is, okay, and what the institutional structure to set it up, who's their custodian bank, their administrator. So be careful. This could save you a fortune. From what I heard yesterday, it could save some of you £50,000 that you're paying some of these people. Do they have their own TV show on a reputable channel such as Bloomberg? Because of course, if they're so good, the big financial shows should have picked them up. Don't trust them just because they say as seen on CNBC. Any idiot can get on TV for 30 seconds. If you don't believe it, just turn TV on now and you'll see a number of idiots on there. Okay, one TV appearance means nothing. Are they consistently back on and on because they're that bloody good? Because the journalists have vetted them and say, yeah, okay, this guy's really good. Do they have their own column in a trusted financial resource like the Financial Times? Not some bullshit internet column. I'm talking about in something which has got credibility. If they're so good, why are they not asked for their expertise like Warren Buffett constantly is? Why are they not in the Financial Times or on Bloomberg? Okay, if they use words like institute, university, school, college, don't trust them. Danger, it's a big name, isn't it? Oh yeah, I've got Traders University, Traders Institute. Really? Have you been to MIT? Okay, Massachusetts Institute of Technology. Have you been to Oxford University? It's about 800 years old and has got 50 colleges in there. That's a bloody university, not some muppet charging you 50 grand, all right, to rip you off. Do they offer a classroom course? Forget it. You can't learn to trade in a classroom in the way you can't learn to drive in a bloody classroom. You should be learning. We live in 2018, soon 2019. You should be able to do it in your own time using computing power in your own time to be able to do it from the comfort of your own home. You don't have to bloody go take a trip somewhere. Do they use their selected broker? Warning signs. They say use our broker, as some of them do. Yeah, well, guess what? You're being screwed by kickbacks. They're getting a kickback, and that broker's ripping you off through wide spreads. It should be broker independent. It should always be broker independent. Okay? Have they won awards from reputable, not made up brands? There's Muppets out there I've seen. Okay, they've made up awards from made up brands, right? And claim, and by the way, the awards aren't for their trading. It'll always be for their education, right? Again, it's bullshit. You're being ripped off. Example: has the Financial Times given them an award for trading? And that's what I mean by reputable brand for trading. Look, it's your money. If you don't set the standard this high when you're paying a bloody educator, right, then you're asking to be ripped off. And then please don't come crying back to me, as so many people do each year, and go, oh, but can you help me out? I got ripped off by this educator, by this broker. And I said, well, did you take any cautions? Oh, no, I didn't do any of that. Okay, lifetime mentoring without any charge. That's what they should be giving you. I'll tell you why. If they're that good and confident, why are they having to charge you for lifetime mentoring or lifetime teaching? It should be, hey, listen, we're so good, you don't need to keep paying for the rest of your life. Right, and also, do they claim to be right 90% of the time? Right, because I've heard one Muppet do this. Well, that means they're better than George Soros. Bullshit alert. No, they're not. Okay, so when they start saying, oh, I'm right 90% with some secret holy grail, bullshit. All right, so anyway, that's the bit about educators. I've got that bee out of my bonnet. Now, let's just look at the markets again. Let's start on the trading part. So much to cover. Sorry, I'm taking a bit of time. Sterling US dollar, right? Worse, I think there's an 85% probability, and this is going all the way back to 2016. Or I think there's an 85% probability that the worst is over for sterling US dollar and where we are now. I think at the moment that's where it is. Now, I'm not going to trade this over the very long term. Oh, by the way, FTSE 100. Wow, you guys are really bullish. I assume you think there's going to be a hard Brexit, the pound's going to plummet, and therefore the FTSE 100 will rise because it earns overseas profits. So it's only 4% if you think FTSE is going to be higher by the end of next year. Oh, it's okay. It's good to know, good to share. One more thing. Let's just ask you this question as well while we're at it. So where's cable gone? There it is. So you guys think the worst is over. By the way, at the moment, well, since the start of December, we've had downward pressure on, we think it's lower, and that's what the way our algorithms are telling us for cable, for sterling dollar, right? But anyway, 15%, there is a 15%. Things could get worse with US dollar, and it could go as 1.21. So it could get even worse. And that's based on a little bit of analysis on there that it could go as low as that. But how do we trade this? There's no point me telling you this and I'm saying, well, come back to me in 3 months. Okay. How do you manage the money that you don't put a trade on? I don't understand, Roberto. Explain that. Okay. Explain what you mean. So sterling US dollar, right? We got to work out, well, what are we going to do on a daily basis? How frequently you're trading, right? And I'm going to explain to you, I want you guys to just do 1 trade a day, not 10, not 20, not 30, 1 trade a day, 1 quality trade a day, or 5. You might pick all 5 on Friday, 5 a week. Now, let me explain to you our trading strategy, which I think you should be adopting, which I was taught by other leading traders. Okay, let me explain that to you. This is how trading used to be in the 1980s. Okay, people used to use simple moving averages, right? Only buffoons use those now. All right. So what people used to use, they used to say, oh, the average price in sterling dollar, whatever else it might be, is this, and therefore the price will revert back to the mean. Okay. They all say, look, it will go up, right? That's what they say. And they'd use the moving average. They'd say the price is going to revert to mean. Then you know what started happening, Jen? This sort of answers your question. Then you know what started happening? Some people said, oh yeah, we'll move in the 1980s. We'll start using moving averages. The price will revert to mean. So some started using them on the 5-minute charts, and some on the 15-minute, because they had different time horizons, and some on the 30-minute, and some on the 1 hour and the 4 hour. And on the 4 hour, you had people who were saying, I'm holding for a longer period, so I'll sell. And indeed, it would fall, because things every day fall and rise constantly. So they made a little bit of money. And some on the short-term frame, when it rose a little bit, said, I'm on the short term, and I think it's going to go upwards a little bit. And they made a bit, because things, as I said, go up and down. But basically what was happening was it was increasing the volatility. And as a principle, moving averages stopped working because people were using them in different time frames. In other words, there's a lot of noise and volatility in the market, right? So we can't use that anymore. Not that you were going to. So in the 1990s, people started using pattern recognition. Okay, they started looking for these patterns, right? And whilst we're going to do a little bit of that, we're going to make it far more sophisticated and bring it up to date. They started looking for patterns, fireworks or camels, right? Which preceded big moves. And they said, oh, look, I've noticed that there's certain patterns which happen before big moves, and these people, it worked for a while, and then different people saw different things. Some people said, oh, that's a head and shoulders. Another said, no, on the Fibonacci, it says this. Another said, no, on the Elliott wave, it says this. Another said, oh, I can't even see the bloody head and shoulders. To me, it's a rising wedge or a falling flag, right? They count all these numbers. And then the Japanese candlestick guy said, no, it's a hangman, mate. It's a hangman. So you had a whole bunch of people buying, a whole bunch of people selling the exact same data, but they were looking at it differently. Just like with Brexit, you got people looking at the same information, presumably, and one bunch is saying we've got to remain. One bunch is saying we've got to get the hell out. 52 to 48. You see what I mean? So it's very easy for two sets of presumably reasonable, rational people to see completely opposite things when they're both viewing the same piece of data. And then what they shout at each other is saying, no, you're just reading it wrong. It's like, bloody hell, look at it. There's nothing to read other than what you can see on the screen, even when you reduced the confusion of the quantity of information. So pattern recognition stopped working because there were just too many differences in opinion of what was and what wasn't working, and all the rest of it. Okay, Roberto, I'll answer your question in a bit in the Q&A probably. All right. Trading in the 2000s, therefore, people started looking at it, trying to be a bit more sophisticated. Computers became more popular, right? So what they started doing is this. I'm not saying we're not doing any of this because none of this works anymore. I've got to make this clear. Somebody said, oh, so why do you use moving averages? I said, I don't bloody use moving averages. Are you kidding me? All right. So trading in the 2000s became with indicators. They started looking at things a little bit more sophisticated. Like the MACD, stochastic, and RSI. And again, this stopped working. No one indicator works all the time. They work some of the time. Well, that's not good enough. Okay, and what these indicators try to do is to measure if there's likelihood of a price rise. Has the price fallen so far? It's likely to move up. So it's oversold because these are in the lower half of the graph is what people would say. And the signal line has been crossed by the moving average, and therefore it's likely to rise. Or they'd say, oh, look, there's a positive divergence or a negative divergence. The price is making higher highs and the indicator is making lower lows. That means there's a higher probability of a fall, and that's all fine. And sometimes it would work and sometimes it wouldn't. So we can't use that. Okay, so we've got to find a way of taking the best bits of what did work, right, and removing reliance on why it no longer works. And the reason some of this no longer works is because computers have come along, algos have come along. So we're going to use computers. We're going to take the best bits of what did work. We're going to throw away the bits and the reasons why it no longer works from indicators, from pattern recognition. And we're going to improve ourselves. Anyway, as all of this was happening, these Muppets came along trying to sell you courses. This is on Facebook, on my Facebook page. This moron, don't know who he is, trying to sell me a course with all these multiple screens and saying, oh, look, because they realized as there became more complexity, they could appear to be educators. All right. And it's bullshit because trading isn't that complicated the way they want to make it. If you want to sell somebody a £15,000 course, the problem became you shoved them in a classroom, showed them lots of complexity, lots of complicated charts like this, and said, listen, I'll give you the holy grail. I found it. All right. And here's 15,000. Oh, you're not making profits. Pay me another £10,000 and I'll release you the extra bit. All right. So forget about it. And as we got more and more data from companies, that became a problem because people didn't know which piece of information to rely on. Now, a guy won a Nobel Prize a few years ago for pointing out that when you give people more information and more data, it doesn't make them more accurate. They've actually done experiments in the financial markets with this. As you gave people more information and more data, they didn't get more accurate. Now, just dwell on that for a second. They didn't become more accurate. What happened is they became more overconfident in their accuracy, even though they weren't getting more accurate. They became more stubborn in their beliefs. So you then had credit crunches and banks like HSBC. Look at this. They said by the fourth quarter of 2017, the dollar to the pound will be about 1.10. 1.10, never got anywhere near that. It was 1.40, right? Their forecasts are bullshit, and they've got more data and information than anybody. So the great news for you and me is, hey, guess what? Even the so-called experts with all their data and information, they're rubbish. So we've got presumably an equal chance to them. And not only that, given that we've got free data, we don't have to pay bloody subscriptions on, right? Which gives us the same prices and the same data as the big funds. We've got to make two decisions. When do we buy? When do we sell? And you can see right in front of your eyes that had you sold here, you would make a profit. Okay, it's not as if it's hidden or secret. It's in front of your bloody face. The charts are there. The price is in front of your face. You got to just click buy or sell. So how come 79% lose money? What are they doing wrong? Let's answer that question. What are people then doing wrong, right? And what can we learn from the 21% who do make money and the professional traders of those who make money as well? Because like I said, after all, you know, Goldman Sachs, dollar may reach parity with euro by end of year, said Goldman Sachs at the start of 2017. They were wrong. Said UBS, euro dollar, okay, go long. They were wrong at the start of 2017. I keep these so I can show people how wrong these so-called experts are. So the good news is, screw the experts. We can't be worse than them, can we? If we're worse than them, we're just wrong. So I'd say there's a 50-50 chance we're going to be better than them. We've just got to tip it over the edge, so we're better than 50-50. So how are we going to do it? Given that I've said those moving averages of the 80s, those indicators of the 2000s, those pattern recognitions don't work, how are we going to devise our strategy? So let me explain how I think it works based on what the leading traders of the world taught me. Financial Times, so, you know, it's out there, taught me. So let me explain. Right, we are going to use a bit of pattern recognition, but not the way it was done 20 years ago. And we're going to use a bit of artificial intelligence, right? And let me explain. Now, there's a lot of different types of artificial. There's autonomous systems, machine learning, deep learning, chatbots, natural language processing, real-time emotion analytics, virtual. We're not going to use any of that bullshit, okay? There's only two parts we're going to look at in this webinar for trading, because there's only two parts which are relevant for private investors. Okay, if you're not a private investor, you're a big fat institution, you might look at deep learning. But for us, private investors, we don't have the sophistication of supercomputers. We don't have the money to go pay for Bloomberg terminals and all that kind of expense. So we're going to keep it relatively simple, but simple will be fine. It means you won't become a billionaire, but you'll make enough. We're going to try and make 500 a month. We're going to take a little bit of money. All right. We might be the poor cousin to the super rich traders, but that's going to be fine. All right. We're going to look at neural networks and pattern recognition, those two parts of artificial intelligence. How does that work in our trading strategy? It works like this. Okay. Trading now, in 2019, as I've shown you with the Stanley Druckenmiller quote, is becoming more like this. And if you're not doing it this way, using as much free resource as you can get your hands on, like this, you know, data which is live, real-time, broker-independent data, by the way. You can use many brokers who offer exactly what I've shown you on screen. So I'm not going to tell you, just only use this broker, only use that one. No, 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 no. All right. We need to work out what inputs to put in. So prices obviously is going to be one of them. Then we need to know how to weigh various factors, various patterns, various indicators. Like I said, no one indicator works all the time. So we've got to work out, well, if none of them work all the time, should we use any of them? Should we give them any weighting? Okay. Which one should we use? Why should we use them at all? And then after we weigh them, that's the hidden part, we get an output. And the output is, do I buy or do I sell? It's as simple as that. That's the output. Do I buy or do I sell? All right. Let me put it another way. And this is what a neural network looks like. That's all it is. It's a subset of machine learning. It's a subset of artificial intelligence. All right. Put another way, how do they work? And some of you might know this. And this is how we're going to do our trading. Now, don't worry. Okay, it looks a bit more painful than it is. For instance, the way neural networks is, they might say, oh, your age is 35, your income is 49,000, education is quite high, you're a man. They'll then weigh those factors. Your age is less important than your income is, and your education's next to not important at all. Okay, then they'll weigh all of that and they'll come with an output and they'll score it and they say, oh, therefore you must be a Republican. We're going to do the same with trading. We're going to say, right, let's look at the certain pattern. Let's look at these various indicators. Let's now weigh them. Then we're going to say, in all probability, having done all of this, added these inputs of these multiple indicators, okay, which I'm going to show you manually. You're going to do this and weigh them. We should buy this or we should sell this. That's it. That's what's going to happen at the end. All right, that's what's going to happen. Now, what we do in our hedge fund, bit more sophisticated than that. There's actually a few more hidden layers than that, but that doesn't matter. Okay, that's because it's you know, the more sophisticated you get, the more layers you add in to add more nuance. But we're going to keep it relatively simple, more like this, and trust me, that'll be accurate enough. I'll tell you what will be accurate enough. I'm trying to look for a coin. I don't have one with me. Okay, I'll tell you what will be accurate enough. A coin is 50-50, isn't it? Imagine heads means buy, tails means sell. It's 50-50. It's going to be right. Because you might go heads, buy, oh, look, it went up. Market went up. Okay, 50-50. Right? We're just trying to be right 60-70% of the time because we're not going to be right 100% of the time because we don't have a crystal ball to forecast into the future. I told you that at the beginning. And we're not God, right? We're not son of God and we're not grandson of God. So we're not going to get right 9 times out of 10 or 8 times out of 10. A coin is 50-50, so we've got to be a bit better than random chance. Otherwise, we use random chance. So we're going to try and go for 6 or 7 times out of 10. 6 or 7 times out of 10 will be enough to get us to our 500 per month, okay? To get us to that level. And then we've got to work out, well, how much capital do we need? I'll come to that, Sandeep, in the business plan section as well. Okay, Roberto, I see what you mean. Asset allocation. I'll come to that in the end as well. How much money should you put into trading? How much should you put into a house? How much should you put into long-term investments? And I'll show you my long-term investments as well, which are my buy and hold and forget ones, or and I'll come to those as well, because obviously you shouldn't just be trading. Like Roberto's asked, if you've got $1 million, do you put it all into trading? Hell no, of course not. But I'll come to asset allocation in a second. You only put risk capital into trading. Okay, so this is what we do. Ours would be a bit more sophisticated. We'll put a few more inputs in, right? What we've got to do is make sure we're not screen slaves. So we've got to make sure we don't have what looks like a good strategy, but it actually, in fact, is really bad. This is what most educators give you. They give you good looking, but bad in fact strategies. They say, oh, you didn't get the signal at 3 in the morning. You've got to be right there. Press it. Oh, you were out by 0.01%. Yeah, well, that's your profit's gone right there. All right. So they're bullshitting you because they need you to be a screen slave, precise with your time, and they need you to ignore broker spreads. If all those things happen, it's useless. And they give you some bullshit back testing, right, where they fit it to the data so it looks like they're accurate. We're not going to do that. And by the way, if you're interested in this whole area, Advances in Financial Machine Learning, great book by Wiley, who are my publishers. The Financial Times and Wiley are both my publishers. Have a read of that book. Okay, fantastic. Now, just a reminder why we are here. Now, SpreadX, I don't know as a broker, but what I'm saying is I took this data for a book I was writing 2 years ago on what the book I wrote 2 years ago was about what is it private investors are doing wrong and what are they doing right. For instance, and I'll tell you in this webinar as well, do men make more money than women or the other way around? Some people make more money on certain securities from a brokerage? Do they make more money at trading certain times of the day, certain products? Do they make more money going short rather than long? Do they make more money if after they've held something for a certain average period, they're more likely to lose? So if it goes beyond that period, they should sell, etc., etc., etc. These were all data points I was looking for because I like, as you've already seen, I like data, I like algorithms, right? And this broker came up and they said, look, profits of their top trader was £1 million. The average profit from the top 100 was 96,000. We're not aiming for any of this, all right? And by the way, that top 100 is 96,000. Average was weighted by the fact that their top one got $1 million, who might have just got bloody lucky for all we know. Despite all these figures, this is why people get excited. We're just aiming for 500 a month, all right, on average. So, and like I said, so they get excited by big numbers, like I said, because 500,000 a month will kill some stress, which are these bloody bills, right? When you try and go for thousands a month, you'll end up in bigger debt, right? And what we're going to do is, look, this is the New York Times. The robots are coming for Wall Street. So trust me, if you're not riding the trading algorithm part, which is what we're going to look at, and the algorithm can be manual. An algorithm is even a manual calculation. I'm going to show you how to do it manually, okay, with this or whatever else. I mean, look at the DAX here. Let's zoom in, okay? But a trader which won't know, and this one's in profit, right? So you want to use the computing power, because one minute you're going short, the next minute you need to go long, and the long trade has to make up for any losses you might have made on any other trade. Or euro dollar, for that matter, is short at the moment. We had 2 long trades, and now we've got a short trade, which is where that red arrow is. That's the short trade. We have this long trade here. We have the long trade there. Great. Now we have to go short. That's the other reason to use computers, because then I'm not stressed thinking, oh, wait a minute, I was long a minute ago. Why am I now short? I take all the stress off me. I let the robot, let the algorithms do it. So we need to know what the manual rules are for trading this way, where we're no longer simply saying, oh, we'll use some moving averages, we'll use some trend lines, we'll use Fibonacci and a bit of Elliott wave and so on. We don't, seriously? That might have worked back then. You've got hedge fund managers like Stanley Druckenmiller saying, I'm leaving the bloody business because that shit doesn't work. Okay, so we're going to need to look at, well, what should we as private investors instead be looking at? Okay, and that's the most important and critical thing for us. So let's deep dive into that part. Great, it's shut down again. Flipping Microsoft, I tell you what a crap company. They'll never get anywhere, will they? Let me just put that back on, right? They really make you lose your momentum. So what we're going to look at is how much can we make, the business plan section. And after we look at how much can we make, what's the strategy for entry? Where do we put the stop loss? Where do we put the entry into our trades? Where do we take profits, if at all we're taking profits? In other words, do we take profits? Do we cap them? Or do we let the system tell us, no, I'm not going to cap any profits. What I'm going to do is let the computer tell me when to get the heck out of there instead. So tell me when the momentum has run out. All right. So that's the way we're going to look at it. That being the case, let's do that. Let's see what I'm talking about right there. Right. So you start off with a position. Look, markets 2019, like any other year, they're going to go sideways. We'll end up having trades which we get the red arrow saying short. Guess what? It says short, but that's a loss. It didn't work. That one didn't work to go long. That didn't work to go short. That one didn't work to go long. What, Alpesh? How rubbish are you? You know what? You can have a string of losing trades. Doesn't matter. Like you might get a string of tails. Bang. That makes up for all of them. So you might say, well, wait a minute. Why don't you have a strategy which only tells you big, large moves? Oh, I wish. Then I'd be right 100% of the time. That doesn't exist. If you don't believe me, for Christmas, buy yourself a book by George Soros, the legendary hedge fund manager, called The Alchemy of Finance. In the second half of that book, he has a diary. In the diary, you'll notice he's right only about 6 times out of 10. Or if you really want, buy my book. I get a royalty of £1 every time you buy it. I declare my interest. You'll make me rich. I get £1 each time you buy Mind of a Trader. Okay. And in there, they'll tell you that they're right maybe 6 times out of 10. The times they're right, they make more money than they lose when they're wrong. So we need to know, okay, given that we're going to have sometimes we're wrong, how do we make sure those losses are tiny? And when we're right, how do we make sure the profits that we make, are we making in that open position, we reinvest and double down on that position, open another position. So if we opened one, we open another. Exactly same to that one. When do we open that so that we can take these big trends? And I'll tell you why, and I want you to write this down. 80% of your profits in any given year will come from 20% of your trades. 20% of your trades will be the big ones, which will generate 80% of your profits. Okay? 20% of your trades will be like this one, which generates 80% of your profits. That's what will happen. It's just the way trading is. That's how it is for the richest billionaires. And trust me, I've analyzed them because I do this for a bloody living. Okay? And when it comes to making big bets, whether it's from Brexit or whatever else, it's 20% of those trades. Right? It's only a minority of trades which will be like that, which will make the big returns. It's a minority of trades which will, look at this, which enter and the market goes up. Now, you, me, everyone else gets the same data. This happens to be euro sterling. Okay, it doesn't matter what it is. It happens to be euro sterling going up and up and up. And you get this going, right, you, me, George Soros, all the billionaires in the world, we're all looking at it at the same time. Right? We want to ride on their coattails. The first private trader might be you. You buy at the same time the richest person in the world did. Private investor, you might make £500 because you've got less capital. Trader 2 is slightly wealthier. He put a bigger trade on. He makes £5,000. Trader 3, they're an institution like we are. So we might hope to make £200,000 because were a lot bigger. So we got bigger trade size. Trader 4, a massive bank or a Soros or a really big hedge fund. Okay, we, by the way, have only got 90 million euros under management. Now, anybody who knows anything about the hedge fund industry knows that's tiny. But then again, 10 years ago, I had nothing under management. Okay, so, 90 million euros under management, not too bad. And in 10 years, I hope to have $1 billion under management. Given our profile, given our returns, our track record, all the rest of it. I mean, we've only been going for 10 years, which again, in the hedge fund industry is pretty small, right? But anyway, that's an aside. My point is, so how are we going to do that? Because we know the positive side with this is we've got the same data as them. We've got to make the same 2 decisions. Okay. And it's just that the difference is they've got more capital. So on the same trade, they'll make more. Okay. They make more. And that goes upwards. All right. And that's going upwards. Okay. Right. So there you go. Right. Now, very often, only 20% of private investors manage to get it right. We know that, James. Only 20% manage to get it right. You know who they make their money from? Most of the time, the 80% who get it wrong. Why do 80% get it wrong? Oh, I'll tell you why I think 80% get it wrong. They're using indicators, moving averages, and all the rest of it. So 80% get it wrong. The 20% who get it right, amongst private investors, they make their money from the 80% who get it wrong. Actually, I tell you who they make their money from, the broker, because the broker takes the money from the ones who got it wrong, because they know 80% going to make it wrong. So the broker says, well, wait a minute, why should I let you trade with the market? You just trade with me. I'll be the casino, I'll be the house. So the 80% who get it wrong, the broker's made all this money, and he gives some of it to the 20% who get it right, because the 20% who get it right don't make as much from the broker as he's made from the 80% who get it wrong. The 80% who get it wrong lose £80,000. The 20% who get it right make £20,000. So because obviously they're a smaller number, 20% of them, all right? Or otherwise the broker is going to be bust if it wasn't like that. And it is like that. So we've got to make sure, how do I get you into the 20% who get it right? And how do we get it right? What do we have to do that the 80% are getting wrong? This is what we have to do. We have to break it down into knowing where to put our stop loss, okay, knowing where to put our entry, knowing where limit order means taking profit, where we take the profit, how we take the profit, knowing how to manage our mind, because a lot of the time I can tell you a trading strategy and you'll be like, oh no, but I just couldn't follow it. Oh no, I got it all wrong. Knowing how much money to put into a trade, very little, okay. Knowing when to add to our winning positions. So when we've got profits, we risk those profits in the same trade to make even more profits in the anticipation the trend will continue. And why am I talking about trends and momentum? Because actually this is one of the most successful trading strategies ever used or devised by hedge funds, which private investors can actually do. Computers are beating their highly paid human counterparts, okay, time and time and time again. So look, and this is 2016, trend following hedge fund strategies lead, and it's computers. All right, so we're going to be using our computing power as much as possible. Like I said, the person who taught me everything that I'm about to show you in terms of the strategy and the business plan was this guy, Bill Lipschutz, global head of foreign exchange at Salomon Brothers. Okay, so global head of foreign exchange at Salomon Brothers. He was in my book. That's how I met him. Lessons in Trading Strategy from the World's Leading Trader. And I keep banging on about the book. Trust me, I only get £1 in royalties. You might think, shit, I bet he gets £15,000 every time he sells a book. I don't. Right? Lessons in Trading Strategy from the World's Leading Traders. He was in there. 9 others were as well. And they became my mentors. They taught me the strategies. Warren Buffett was his chairman at the time at Salomons. I never met Warren, but Warren Buffett was Bill. Bill was hedge fund manager of the year in 2016, by the way, just so you know. And he trend follows and he's showing me the strategies. Why would he share the strategies with me? Well, I was a small fry. If I just go and buy right now, if me and Jayant go and buy sterling, do you think somebody's about to lose money all of a sudden? And they're all going to, and Goldman Sachs is about to close up. Jayant and Alpesh bought sterling. Let's close up. No. I don't give a shit. It's a $3 trillion a day market. All right. Oh, one other thing I've got to do. I need your permission for something. If I promise to continue giving you great content in this webinar, can I, in the last 10 minutes, and you don't have to stay to the end, tell you about technology my hedge fund has created, something we're going to float on the stock market. We want it to be like Uber. We want it to be like Netflix. We want it to be like Amazon. All right, because technology is the way to go. So our hedge fund invented technology. We're going to float it. Can I tell you that right at the end in the last 10 minutes? You don't have to stay. The reason I say this is because sometimes I talk about myself at the end and people go, you bastard. It was great content. You told us how people trade. You lifted the lid. You showed us the live trades and what's going on in the markets. And then you talked about yourself. You've ruined my Christmas. You've ruined my year. In fact, Alpesh, you've just ruined my life. I mean, some of them get really emotional about this shit if you talk about yourself. By the way, just so you know, Amazon There you go. So I've got a long-term, so I'll tell you some of my long-term holdings. I've got a long-term buy and hold forever. Okay, Amazon holding. And every time there's a short opportunity, you'll know this if you've been on my webinars. If there's a short opportunity, I love shorting Amazon because then that's a profit from it falling in price. So I make my money from the fall in price and can buy with that profit some more Amazon stock in the future, or it just pays off the historic cost of Amazon that I bought in 2000 and have been buying ever since. Okay, so that's the point of it, right? And that's just one of several strategies around tech companies that I like to follow. And I'll show you some other trades that are going on at the moment. As soon as something sort of catches my eye, or my assistant tells me it should catch my eye, I will go into it as soon as that happens. Okay, so let's get on with, therefore, the next bit. So how are we going to do the business plan and the trading strategy? The business plan and the trading strategy. We're going to move to this bit. Okay, we're going to use computing power and we're going to leverage it as much as possible. What are we going to do? And like I said, the reason is, if you don't believe me, robot or human, which is the best one? This keeps on coming up. And if you're not doing this, you're going to be left behind this way of trading. So how are we going to do it? Let's do, first and foremost, the business plan. So Bill Lipshott's taught me this. Global head of foreign exchange at Salomon Brothers. That's my mum. Always makes an honorable appearance in all my webinars. There she is. Again, that's me. Fat, double-chinned me. All right. And what we're going to do, what we've got to answer ourselves is this. Okay. He said to me, Alpesh, before you even do this, and I think Jayant, or was it Sandeep, asked me, yes, Alpesh, but how do we know how much money we're going to make? First, we need to have a business plan to know we're going to make enough money. And then we need to have the strategy, which then tells us, okay, yes, go into, whoops, where's it gone? Lift this up. Go short into Disney or whatever else it might be, whatever other sort of trade captures our attention. Sterling, okay, Jonathan saying, have a look at sterling. There you go, against Canadian dollar. We had an initial long, and then we've got a long, which has come up just now. All right, so we'll keep an eye on that one. We'll keep an eye on that one as we go ahead, and we'll keep looking at the trades and how many you should have. So listen, we need the business plan. And trading sometimes feels overwhelming, because I've told you a lot of stuff in a very short space of time. Feels really overwhelming. Don't be overwhelmed, and I'll tell you why. I'll tell you why not to be overwhelmed. Several reasons. Trading's like driving. When you're driving, you've got a wing mirror, you've got a rear view mirror, you've got a steering column, you've got clutch, accelerator, you've got all of that. And you know what? It feels overwhelming, but we all learn to drive, right? Given that we all learn to do that, it's going to be the same with trading. It's going to become easy. It's going to become almost subconscious. All these things I've said, stop losses, entries, limit orders, when do we add to a winner? It's going to become easy because we're going to use as much free stuff as we can, like free data and all the rest of it, and say to ourselves, right, look, this is Bitcoin. Long time we say, oh, I hate Bitcoin though. Yeah, but you know what? You don't care where you make your money. You should never care where you make your money. Notice how I've looked at currencies, indices, equities, cryptocurrencies. I don't care where I make my money, and you shouldn't care either. If you've got choice like this, and write this down, if you've got choice of trends to look into, then you've got the opportunity to pick quality. Write that down. Choice, opportunity, quality. If you've got the opportunity to pick a quality trade, and I'll show you how we do it, then you're more likely to make money. All right. The problem most people have is they manually just look at one thing only all day long, the FTSE. If the FTSE's not trending, they're screwed, and then they're out of boredom. We'll place a trade. How many of you have placed a trade out of boredom? Okay, has that happened to you and it's been a rubbish trade? How many of you have placed a trade and it's moved immediately against you? I.e., you've done a low quality trade but thought God was out to get you. Put your hands up. Happened to all of us. The point is, we're going to remove those problems by ensuring we look at quality. So let's look at the business plan first, and then the entry, and working out these steps. All right. So Bill said to me, look, you want to be rich, do you, Alpesh? Because this 20 years ago, I was at university. I had next to no money. All right. I was making a little bit from investing, but I didn't have enough. I mean, you had to come out, make a bit of profit, you pay for groceries. That's the way it was. Okay. So we need to know, when do we enter the trade? When do we take the profits? And there's a poll up at the moment. And let's see, you put numbers in, right? So he said, what you do is start off with how much you could lose. And I said, what? Just tell me the secret strategy of how much I'm going to make. Don't tell me how much I could lose. You know, this is the global head of foreign exchange at Salomon Brothers. When they tell you about how much you could lose and you see how successful they are, you know, actually, that's how you should be looking at things. That's how a person like him has got to where he's got to and is managing billions, right? So he said, first thing I want you to look at is what's the maximum of your total capital you should lose on any one trade. He said, when you're proficient and successful, it should be maybe just 1% of your total capital. And when you're proficient and successful, imagine you get through friends and family, credit cards, whatever, £20,000 or 20,000, not through credit cards, friends and family, £20,000 or $20,000 in 2 years or in a year. The end of 2019, you'll have that much capital through friends and family, Alpesh. I went, okay, because you'll show them you've got a track record, you're making enough money, okay, and so you're successful. I went, fine, I understand that. And the next bit we're going to look at after this is when to enter a trade and when to take profits. Okay, so the maximum loss per trade is 1% of £20,000 because, like I said, maximum loss on any one trade will be that much. And I said, okay, Bill. And the reason he was showing me this business plan, he was trying to say to me, Alpesh, is it really worth your while trading? Let's have a look. And then the win-loss ratio, assume the strategy we're going to look at next in this webinar gives you, you're right, 100. You're right, 70 times out of 100. So 70 times out of 100, you make a profit. 30 times out of 100, you lose in that trade. So your average loss, 30 times out of 100, will be £200. Just bear with these numbers for a moment. They're over optimistic, but I'll show you that that doesn't matter. We're going to really tone it down. So in our business plan, average loss is £200. Average win, because remember, we're going to pick a strategy like this where's it gone? Where's sterling gone again? Louise, here's your sterling. Was it sterling? No, it was the other one, wasn't it? What did you want? Oh, let's look at Apple. So just as we looked at Amazon earlier, okay, so tech stocks taking a beating again in America, right? Let's look at Apple. I've got Apple I'm going to hold it until my son has got grandchildren, all right? So because I've got a long-term holding, I like shorts on Apple, as people know, watch my webinars. Every time I go short, I make money, and therefore it pays off my long-term holding. So my long-term holding is effectively free. It became free a long time ago. Great, right? So this is where Apple is at the moment, and it's short. Now, we are going to, with our trading, we're going to have a strategy where if we're wrong and this yellow line, our stop loss gets, if we're wrong and the stop loss gets hit, fine. Come on, Alpesh, fat fingers. If we're wrong and our stop loss gets hit, right, we get the hell out of there. And that's fine. We got the hell out of there. And let me put it, oh, God. There we go. Literally God. There we go. Excuse me 1 second while I make that appear on screen again. Don't know why today the bloody computers are just being awkward with me for some reason. I'll come back to it. We're going to make sure we add to our winning trades, but never to our losing trades. And the reason for that is there's a term for it. Winners add to winners, losers add to losers. Okay? Winners add to winners, losers add to losers. We're never going to add to a losing position, right? That's part of the trading strategy. We will never add to a losing position, right? That's where the stop loss is. That's the entry. When it goes in our favor, see that red dotted line? I'll tell you how you manually can generate that. We'll double down on our position because we'll have had a bit of a profit there, won't we, by the time the price gets there? And because we'll have had a bit of a profit by the time we get there, we will risk it to make even more profit. It's like if you find oil, you know, in your garden, you don't just say, oh, put a cap on it. And that's why I hate risk-reward ratios. Risk-reward ratios are saying, oh, if it gets to this reward level, I'll just cap it. Bullshit. Why would you cap it? Best traders in the world don't cap it. They make 80% of their profits from 20% of their trades by finding these ones which just keep going on and on and on, okay? And that only happens 20% of the time, but that's fine, right? And then what will happen is wherever we get our stop loss, SL, there, just clear the screen, okay? We will never, if the price went there, we would not add to a losing position. Losers add to losers. Another hedge fund manager said that, one of the most famous in the world, okay? And winners add to winners. That's one of the secrets of how successful traders got rich. So you might ask, well, how the hell did you come up with that stop loss over there? We always use two secrets of the most successful, richest fund managers in the world. Okay, and I'll come back to this later, but I'll just give you the overview now. One, they always use what's called volatility-based stop losses. What does that mean? That means if that's your entry to go short because you think the price is going to fall, they will, the more volatile the market, and by volatility I mean how much is it moving in each period up and down, that's its noise, isn't it? So if it's moving 10 points on average over the last, I don't know, 10 periods, on average it moves 10 points up and down, they might say, well, I'll put this 2 or 3 times away so it's not going to get stopped out by noise. You don't want to be stopped out by noise. I'll explain this principle later. So that's called a volatility-based stop loss. The more volatile the market, the further away the stop loss. But surely, Alpesh, if your stop loss is further away because the market's more volatile, as it will be in 2019, aren't you going to lose more money? No, because the second secret is volatility-based position sizing. What that means is the further away the stop loss, the lower the amount of money you put into a trade. So you still only lose the same amount of money if the stop, wherever the stop loss is, whether it's close or whether it's far, because you just changed the amount of money you put in. So if the stop loss got hit, you will lose the same amount of money. Okay. Now we don't want to lose it all, obviously, but what that does is it ensures several things. First, we never add to our losers. Secondly, volatility means we never get stopped out by market noise, because we'll make sure the stop loss is volatility based. And it means just because the market is more volatile, we don't lose more money. Ingenious. It allows us to start small, knowing that when we're in a bit of profit, we'll double down and make even more. Okay, so because we know we're going to do that, we can afford to start small. And if we find a big trend, we plow into it. So winners add to winners. And we're going to find a strategy where, on average, therefore, we make more when we win than we lose when we lose. So assume we make £300 when we win. Now, let's say you did 100 of these trades. For argument's sake, just bear with me. Imagine you did 100 of these trades. Okay, well, on that maths, 70, and this is, I was at university, Bill Lipschutz was going through this business plan with me, global head of foreign exchange, going through this for my book, and I said, oh my God, Bill, 70 are going to make £300 in profits. That's amazing. 70 are going to make £300 in profits. That's £21,000. Okay, because we said 70 out of 100 will be right. Don't worry, this is over optimistic. I'll tone it down. 30 are going to be losing, he said, though. Calm down, Alpesh. I said, yeah, but Bill, that still means net profit per 100 trades will be £15,000. I said, call my parents. I'm leaving university. I want to do this for the rest of my life. All I want to do is sit in my underpants, eating nachos, tapping away on a keyboard, and magically money will come into my bank account, which is what you all thought this webinar was about. It's not that easy. Okay. And Bill said to me, calm down. Net profits of £15,000 per 100 trades. Bill, I could make that. Call them now. If I find a strategy, I told him, which does 100 signals in a day or a week, I'll be a day trader. That's what people wanted to be 20 years ago. All right. Or I'll just keep my day job. I'll tell my parents I'm keeping my day job, so I'll stay a day jobber. Okay, but if I'm a day trader, let's say I'm a day trader, Bill, what a dream. I was training to be a barrister. So you can imagine my parents would have been happy, wouldn't they? 1 minute he's going to be a barrister. Now he's something called a day trader. WTF. Okay, 100 trades in 50 weeks. Assume there's 50 weeks in the year, because the other 2 weeks, obviously, I'll be gallivanting in my Lamborghini. I don't have a Lamborghini, by the way, because I'm not a tosser. 100 trades per week, 50 weeks in a year. That's 5,000 trades per annum. Well, 5,000 trades per annum at £15,000 per 100 trades would be £750,000 a year. I said, Bill, my God, that's more money than I've ever seen. All right. I was a student, remember, £15,000 is more money than I'd ever see. I said, so that's all I've got to do, Bill. And he said, look, calm down. I said, no, okay, look, I'll calm down, Bill. I'll keep my day job. I'll tell my parents, no, don't worry, I'm going to be a lawyer. I'll do 100 trades every 6 months. So 200 trades per annum. And he said, well, that's a bit more reasonable, 200 trades per annum. That works out at £30,000 profit per annum when you say it's £15,000 per 100 trades. And I tell you what you're all thinking. You're all thinking, hang on, we're not going to, Alpesh, we're not going to do 10% of 75,000, 750,000. We're not going to start again. We're not going to do 90% of that. We're not going to do, let's go back to that number. We're not going to do 90% of 750,000. We're not even going to do 2/3, a half, a quarter, okay, a fifth, 15%. Let's say we did 10%, 75,000. 10% of that is still way more than the 1,000 per month, or 500 to 1,000 per month we're targeting. So on this business plan, even if we only did 10%, we exceed the business plan, don't we? So wait a minute, let's get more realistic. Being more realistic is we keep our day job, we do 100 trades for 6 months, or one a day, right? 100 trades every 6 months, or 200 is one a day. It's one per working day, okay, or 200 per annum. That's £30,000 per annum. So it's less than half of 10% of our business plan. So let's say we did that. But even that, 30,000 per annum, is way more than the 1,000 per month we're targeting. So in this business plan, if you take 10% of it, 75,000, over optimistic, halve it, 30,000 per annum, over optimistic, we're looking only to do 1,000 per month. What that tells you is this business plan is worth pursuing, because all business plans are over optimistic. If we hit 1.4% of this business plan, we'll get our target of 1,000 per month. All right, because So now we know, hey, you know what? It's worth trying to learn to trade, even if I'm starting with $1,000 today, because if I get consistent profits and I can show friends and family, I might get to 20,000 by the end of the year of capital under management, and that gets me on the way. But the question you should all ask is the same one I asked him, and he asked, I asked him and he answered, which is, wait a minute, Alpesh, if that's correct, 1 trade a day, 200 trades per annum, and you're not saying you can make £15,000 per 100 trades, you're going to do far less than that because you're not taking 10% of that. You're not even taking 4%. I think you're taking 1%. If that's correct, how come everybody isn't rich? That's what you should be asking me. That's exactly what you should all be asking me. How come everybody isn't rich then? And he answered it. Because I asked Bill that. I said, well, wait a minute. If all these numbers are right, and I can take a business plan, I can decimate it, I can halve it again, and I'm still exceeding the target I should be trying to achieve, how come everybody isn't rich? Because even if they mess it up massively, they still hit their target of $1,000 a month. And he said, the 2 reasons for failure are very simple. Bad teachers, bad mentors, and you've seen lots of those earlier. I showed you the information. Bad strategies. So let's, in the final part of the webinar, focus on the bad strategies. And by the way, as we go into the strategy, let's talk about a good strategy, our strategy that we're going to use so that we can do and can get on to the back of trades like this with Apple, okay, where it's been falling, and we can get into that and we can be relaxed, okay? So how do we get the strategy which uses everything that we've learned, that we can't use indicators, we can't use moving averages and pattern recognition, but how can we do it in a clever way using computing power and taking the best bits of those things? And by the way, when I asked all of you, what's your number 1 trading problem? The answers I've received, number 1 is knowing when to enter trades. We're going to do that in the strategy part. Knowing when to take profits, strategy part coming up now. Handling emotions. I suggest when we've got a strategy, emotions don't become a problem because you just follow the strategy. Using a stop loss, coming up in the strategy section now. So brilliant. All the things which are your biggest problems we're dealing with in the final part of the webinar. Okay, so how are we going to do that? How are we going to do that? Well, like I said, what we're going to do with a strategy, I said to Bill, let's just recap, Bill. It's not 100 trades per 6 months, 200 trades per annum. That's what we're aiming for. Yes, it is. 1 per annum. It's not £30,000 per annum. Okay. My mum again, there you go. Remember, our goal is only a mere 1K per month. Okay, whilst the business plan says we could make around 30K per month, no, 1K per month is all we're going to target, right? That's all we're going to target, my friends. So in the final part of the webinar, let's look at the strategy that he taught me, which is one of the 10 strategies we have in our algorithms that we look at, okay? And that we focus on. Oh, by the way, in case you didn't see it, that was it. Don't buy the bloody book. Like I said, don't buy the book because I'm going to show you the best bits for the strategy of that just as soon as this program again stops crashing. I cannot believe how rubbish Microsoft honestly is. So we're going to look at the strategy. Now he said to me, look, Alpesh, what we're going to have to do is we're going to have to take the best bits. Because you're a poor student, you're not going to go and buy supercomputers. You're not going to do it the way Salomon Brothers does. You're going to have to do it the way a private investor does. All right. And I said, fine, I'll do it the way a private investor does. I'm not proud. I don't have a problem with that. And he said, what we'll do is we'll take the best practice from what maybe the best hedge funds do, but you'll be using slightly different approaches to them because obviously you don't have the same access to the same resources, but we'll take the best principles and practice. I said, okay, that makes sense. We'll use the best principles and practice, but because I'm a private investor, we'll do it sort of my way, you know, the appropriate way for me. So let's look at that now, which is this bit, the final bit. There it is. Okay, he said, what we're going to do, we're going to measure the momentum. We're going to, the best way for you as a private investor, the cheapest way for you to do it is to measure how close to the high the price closes in any given period. We're going to measure strength and momentum. And I said, why? He said, if you measure how close the price closes to the high, you've got an increased probability that the price is going to move up. In other words, there's going to be a firework on the ground. I said, well, really? Explain more. Okay, he said, look, it's a bit like an auction. I've got 30, anybody give me 40? I've got 40, anybody give me 50? I've got 50, anybody give me 60? If the price is closing near the high, there's buying pressure, there's psychological buying pressure, and that principle can apply whether it's Bitcoin, whether it's US dollars, whether it's Amazon, whether it's DAX or FTSE. That gives you ample choice, Alpesh, to choose from. And then you can pick the very best of all the choices you've got, so you get the strongest quality trade. I went, okay, I understand. Because higher the price each period and closer the price is, then the more likely it's going to move up in the next period. Remember, we're trying to follow trends. Okay, we're trying to follow trends. So I said, how am I going to do that? He said, look, we're going to take the best bits of what works and we're going to allow and remove the bits which don't work. So I said, okay. He goes, look, I've told you before, indicators don't work. So what we'll do is what hedge funds do, which is they don't use one indicator, they use multiple indicators and see if they're all synchronized, see if they're all pointing in the same direction. I said, yeah, but Bill, you said one of the indicators don't work. So he said, yes, the way we allow for that, we still use them, but we use multiple indicators and see if they're simultaneously working. And I said, well, it can't be that easy. And he said, no, it's not. Because one of the other reasons they don't work is people in different time frames are trading differently. So he said, what we're going to do is see not just are these multiple indicators pointing the right way, but we're going to use them in the way the textbooks don't, because the textbooks have got it wrong. Okay, otherwise textbook writers will be rich. But we're going to look at multiple timeframes. Do they, in multiple timeframes, short term, medium term, long term, all point in the same direction? So we're going to filter. We're going to triple filter. We're going to qualify our trades, and we might throw a lot of good trades away because we're being too cautious. That's fine, as long as we get our good quality one trade a day, as long as we scan looking for those things across multiple assets here for 15 minutes, find one where the trend's about to start. We're going to look at these things. So I said, what we're going to look at, he goes, so we're going to look at these multiple indicators, for instance, the MACD. It's not all we're going to look at because that won't be enough. You'd get it wrong. Okay, multiple indicators. Are they flat to rising? He said, so that they're all synchronous across multiple time frames. And I want you to write that down. Multiple indicators across multiple time frames, flat to rising. Now, let me tell you why that's important. And that's not all. We do some pattern recognition as well. Multiple indicators, such as the MAD, stochastic, RSI, none of them work all the time. So we filter. Are they all pointing in the same direction, suggesting a buy or a sell? So we're using them in the way textbooks never do, because we're looking at the angle of inclination. Are they flat to rising? Are they flat to rising? Secondly, because they don't work because people are looking at them in different time frames, we're going to look at them in multiple time frames. Okay, so we then got the computer to do all this. Obviously, you can do it manually, all right? Multiple time frames. It's very important. All hedge funds do this. They look at multiple indicators. They might look at different indicators. Some of them might be looking at their custom bespoke ones, but the principle is they're looking at multiple indicators, not one, not the way the textbooks do, across multiple time frames. And then the third secret that he taught me was PC, okay, which I'm going to show, well, PC and PR. And I'm going to show you that now, all right? What's PC and PR? And this was really the secret. It's this. Right? Price confirmation is PC. He said you need the price to then confirm. You need Goldman Sachs or somebody else to have actually lit the torch paper because they found that there's fireworks there. And I said, okay, so that's price confirmation. The price makes a 2-period high. I understand that. I can see why we'd want that. But how do I find that there's still fireworks there? He goes, well, multiple indicators, multiple time frames, and pattern recognition. We're going to use artificial intelligence, neural networks to look for those patterns, to see, yes, there's fireworks, okay? So multiple indicators, multiple time frames, okay, price recognition or pattern recognition and price confirmation. It was the price confirmation, the 2-period high, which was absolutely critical for me. And like I said, you can do this manually, and I'll show you how we do it on the computer. And if you want to download, you can download it as well. But I'll show you how you can do it. So we've got a long trade on Dow. So look, let's say you're watching this. You see the green arrow saying, right, that's where we've got multiple indicators, multiple time frames, pattern recognition, suggesting there's fireworks, and indeed the price starts rising up. Great. We only need to watch the market for 15 minutes in a day. One of these is always going to come up because we're looking at 12 to 20 different products over a 15-minute period. One of them is going to come up. Okay, we know where the stop loss is because it's based on volatility of the market. Okay, so we know it's over there. We know where we're going to add to our position, and we can tell our broker when we see the pattern, when we see that telling us, we can put a message in saying, right, put a stop loss here, buy more if it hits this. If you don't know how to do these orders, your brokers will tell you, or I'll tell you in the Q&A. Okay, put a stop loss here. If you're going to go to work, just make that a trailing stop loss, and the market will automatically trail the price. And if it falls too far down, it'll exit you at a profit. If you're going to be in front of it, you'll know when the momentum's running out. Okay. But remember, it is not just looking at multiple indicators. This is what people get wrong. They think, oh, is it just looking at stochastic? All three are pointing upwards. No, multiple indicators, multiple time frames, price confirmation, pattern recognition. Okay, so we did that, and the 2-period high was the most important. That was the. I'll show you how to download it in a second, Ben. Timothy, I'll show you how to download it. Okay, don't worry, or you can do it manually. It's one of our 10 algorithms that we use. It's the oldest one. It's one of the ones he taught me. I perfected this when I was at Oxford. Okay, it's red carnation, last exam. Sorry, I look at tit. Perfected the strategy, and then I won awards. Financial Times gave me the award because they had a competition to forecast the markets over a 12-month period. I won that competition against fund managers and everybody else. Patel is top FTSE 100 forecaster. Okay. They then said, well, look, you're good at this. Do you want to write some books on it? And I said, yeah, because that'll help me raise my profile. And you need a profile if you're going to manage money, because you're going to have to approach sovereign wealth funds. They don't want to see you unless you've got a profile. So I wrote books on trading to raise my profile. They said, would you like your own column? You're really good at this stuff. And I said, yeah. So I wrote my diary, a diary of all my trades every week for 5 years, 200 odd columns. And then I set up the hedge fund. Okay. By licensing the technology to companies like Merrill Lynch, Barclays, American Express. There you go. There's my beautiful little face over there. They licensed it. They paid me a fortune. Them, American Express, Barclays, a whole load to license versions of this technology. And there you go. That paid, well, they paid me $1 million basically, because that's how much it cost to set up the hedge fund. Because you got to pay custodians, we had to pay our lawyers, we had to pay accountants, auditors. I can talk about that in the Q&A. But it was that price confirmation. It was the multiple indicators, multiple time frames. It was that basically artificial intelligence or actual intelligence. Then we converted it into artificial, which is what we mean by computers. The inputs we put in were MACD, stochastic, RSI, put all this in, pattern recognition. We weigh them. We then look for the patterns beforehand, price confirmation, 2-period high, and then we can see, yes, this is it. So it was no longer what people do where you're just looking at one thing. It requires weighting of multiple things. That's the critical factor. I became a big thing in technology then, not just in so I get invited around the world. This is me at India's #1 technology innovation and entrepreneurship summit this year, talking about what we do with our algorithms, what we do with trading, and how we do this, and signing autographs. Okay, if you're not using that, we put that all into one indicator. If you're not using indicators, that's fine, but your trading will be like this. I just want you to know, okay, just like I warned you throughout this webinar about the pitfalls, if you're not doing it that way, you'll be looking at one instrument. If you're not looking at multiple instruments, you'll be trying to pick off at any given time one trade at a time, okay, such as this is gold, and that's fine, because but the only thing is you'll have to wait a long time and just do one, and you'll never make serious money because you're trading too infrequently, you're looking at things too infrequently. Whereas if you automate through an indicator, then you've got more speed, and that's with an indicator, okay? That's with an indicator, and that's how we get speed. That's how we get speed, all right? That's the critical factor to making money, using that methodology. We put that into one algorithm, but the rules of the algorithm are multiple indicators, flat to rising, multiple time frames, price confirmation, pattern recognition. We then gave this indicator, and I'm going to give it to some of you in a minute, so don't worry. I can see some of you screaming, can I use it? Because if you don't want to do it manually, you can automate this, okay? Before the indicator and after, so orange is after, all right? Because there's no point giving people technology they can't use. And what happened, we noticed, is after the indicator, their confidence in their strategy shot up. After the indicator, they had lower stress over losses. After the indicator, they had a business plan for long-term profits because we gave them the business plan. They had lower stress over losses because it tells you where the stop loss is, because that's based on volatility. Although, like I said, you can do all these things manually. Confidence, we used to have to do it manually. They had confidence in the strategy. They had clarity of exits, okay, because it tells you this is where you exit, the momentum's run out, or you use a trailing stop loss if you're not going to be at your computer. Clarity of entries, because it tells you, as you said, one of the key problems you all face is when to know when to enter. It tells you when there's multiple indicators, multiple timeframes, price confirmation, pattern recognition, that you should look to do that. And then what we do with our algorithms, we constantly update them because market variations happen. So we're on version 4 of our algorithm at the moment. And then clarity of stop losses, because it tells you the stop loss. That's how I think using artificial intelligence 2019 is going to have to be the way. You saw the quote from Stanley Druckenmiller. You've seen all the newspaper reports about it. If you're trying to do it some other old-fashioned way, you're screwed. Now, I said to you, if I promise to give you great content, can I, in the last 10 minutes, give you what technology my hedge funds create? Can I just talk about that, please? Okay, so forgive me talking about myself. So what we realized in the industry, and this is what I'm really excited about, this is why I copied 2 billionaires. Actually, I copied 4 billionaires, but 2 of them in particular. Jeff Bezos is a hedge fund manager at D.E. Shaw. He then set up Amazon and is now the world's richest man. He set up a technology, spun it out of his hedge fund, which people don't realize. Okay, spun it out of a hedge fund, created Amazon. We did the same. We copied this idea. We said, wait a minute, why don't we create the Google of trading? Google is an algorithm, okay, which searches the internet for information, doesn't it? Google, what's the time? It searches the internet. Or Google, where can I get a haircut? Okay, it'll search that information. Well, this is an algorithm, isn't it? What I just told you, multiple indicators, flat to rising across multiple time frames. Given that that's an algorithm as well, and look, I showed you earlier euro dollar, okay, so what's happened? And you can see that live on air. It's completely whoops, there we go, tanked, it's fallen, and that's happening live on air. Okay, CC, yes, there will, for a very limited time. Okay, so there you see that. Bosh, that's what trading's about. Bang, right there. And you see the short, and I'm relaxed because I'm on a webinar. That's how trading should be. It should be relaxed without stress. So we put all of that algorithm rule that we had developed through the artificial intelligence, through the pattern recognition, multiple indicators, into one super indicator. And we called it the pipspredator. We called that technology the Project Pipspredator, spun out of my hedge fund. We're going to IPO that's going to float this technology company. So I stole another idea from the founder of Apple, Steve Jobs. Steve Jobs always, whenever he's launching a product, would be the one to come up on stage and say, this is my product, this is my baby, okay, here it is. And that's what we did, okay? And so I'm telling you now, and I'm really excited about this project. I'll show you how to download it. Don't worry, we want a group of people to keep testing and using this, make some money as well. Jen, I'll mention the brokers in the Q&A, okay? And I said to my team, put this together, which includes all the other rules, and then it just tells me on the screen, buy when the price goes above the horizontal line because that confirms this price momentum and the odds of a profitable move have increased. And the hour will alert me. If I want, it'll alert me on my phone or iPad or SMS or push up. I don't like that. I like to just look at the screen and then I like to go to meetings or what else I need to do in place to, or actually my team. We have in our office, we have people who look after currencies, people who look after indices, and people who look after equities. So I've got 3 people, each one's in charge of different things, okay? And it's for them really to place the trades following the rules that I devised, which I took from Bill Lipschutz. The point is, the most important thing on this webinar you need to know is this one. We found the 1 hour time frame to be the most lucrative. Why? Because we found that that was the best balance between the number of trades and the size of the trend. Okay, what I mean is this: the number of trades we actually took, not back tested. Back tested bullshit. Okay, back tested means you traded at 3 in the morning without any slippage, and the broker didn't rip you off. We're talking about actual trades placed. Okay, 25 trades typically per trader. Okay, in the office, per trader in a month. Okay, and I want them not to do too many because if they do more, they might do lower quality. All right, so 25 typically in the now. This month has been phenomenal because there's been so much volatility because of Brexit. So this month will be at least 40 trades. All right. Some months on average it's 25, and some months like August is quiet and you get about 16 trades. All right. So the most important figure to know is the net pips captured, the winning minus losing pips using this pipspredator, the algorithm that I've talked about that we created, 2,250 net pips captured in a month, typically. Now, the best winning streak was 70 winning trades out of 100. The worst winning streak was 30 out of 100. But I don't care that the worst winning streak was 30 out of 100 because when we win, remember, we're making more money than we lose when we lose. So we're not stressed about that, right? And also our net pips captured, winning minus losing, was 2,250. In our best months, there's a big variance, however. In our best months, that might be as high as 4,000. Okay, and in our worst month, it might be as low as 0. Whoa, months you just don't make any money? Yeah, guess what? Yeah. So, but despite that wide variance, on average, it's about 2,250 points or pips per month. Now, imagine your maximum loss per trade before you get an exit is about 50 points. So 50 pips, and it says exit, stop loss. Right, for argument's sake, okay? 50 pips or 50 points. Doesn't matter. And this is not just for CFD traders or spread bets. Could be trading options, futures, doesn't matter. The principles of a trend are all the same. Now imagine you do £2 or $2 a trade. Now that's way too much risk. Way too much. Okay. There's this company which goes, oh yeah, so bet this is betting £20 a point. And I'm like, yeah, that's the bullshit bit, isn't it? £20 a point. You're kidding me. But let's say you even did too much risk at £2 a point or $2 a point because you'd lose £100 or $100 on a trade. I think that's too much risk for private investors. Okay, but just bear with me 1 second. £2 or $2 a pip times 2,250 points in a month. In a month, remember, that's the net pips across 25 trades, would mean you're making £4,500 in a month. Okay, well, hang on. £4,500 in a month across those 25 trades at £2 a point. That's too much. Remember, I said our target is 500 a month, not 4,500. It's 500 a month. So we should be happy doing 10% of this. We should be happy doing 20 pence or 20 cents a point. And there are brokers which will let you do that. 20 pence or 20 cents a point. Okay. Jayant, I will indeed. If you want a head start, Jayant, all right, I'll reply in private. Here, you can go download it. He wants to know. All right. There you go. You're going to get a head start over everyone else because there you go. All right. That's just for you, Jen. Was £500 a point. Sorry, £500 in a month. So 20 pence a point. That's when we knew we had something which was mass market. Because if you could say to private investors, you can start with as little as 20 pence a point, no broker wants you to do that. They want you to do £1 a point. They want you to do loads, so you lose all your money quickly. But I'm not tied to saying go to this broker, go to that. I'm not from a broker, okay? So I want what's in your best interest, which is to make more money. So then we discovered now we've got the Google of trading. We've got what we think is a $1 billion technology. We then started, I went to Tokyo to meet SoftBank. I went to Silicon Valley to meet Google Ventures, Amazon Ventures, because they understand big data, okay, to invest in the company. We think at an initial venture capital investment, this company will be worth about 30 million to kick off with, given, I'll give you some statistics why, given the number of people who've been profitable with it. And then we're going to IPO it. And I think in about 10 years, it'll be worth $1 billion. I think it'll be a unicorn like Google, because like Google, it's an algorithm. And this is where, and I'm really proud, it's a British company as well. And let me show you again. I'll show you how to download it. Don't worry, don't worry. Rakesh Sharma, 193 pips, including additional positions, 48 hours, £1,930. Okay, go short. Now, it's the additional positions. These are always key. That was the good. Okay, but then you might get, okay, you get a trade goes nowhere. Doesn't matter. Any good trend following momentum-based strategy should be such that you make on the trends, but if the trends don't follow through, your losses are small in size, short in duration. So let me show you some losing trades. Let's look at losing ugly trades. This is Seb from Leeds, my hometown, 210 pips, including additional positions, £4,200 in 4.5 days. He's doing rather large sizes because he's now qualified. So I stole an idea from two other billionaires. Look, if you want to be a billionaire, you copy billionaires, okay? The billionaires were Donald Trump and Lord Sugar, because they both do the Apprentice TV program, which is what they're both best known for. And what they did is they gave their apprentices to do it, and then when the apprentice gets confident, they get more money and they can trade. So Seb was trading with my capital. I gave him some of my capital. Why? I give some of my apprentices my capital. Simple reason. If they show they're consistently profitable, I'm diversified because I can't look at all of this. Okay. They don't get to keep the capital. They get to keep some of the profits. That's all. And look at this. He had a string of losing trades. Up arrow, trend didn't work. Trump might have done a tweak, God knows. Down arrow didn't work. Then all of a sudden, bosh, and you're adding to the winners. And that's fine. And I don't care. And I said to Seb, I don't care, because look, you made 4,200. I don't care that there were 3 losing trades and 1 winning trade, as long as we got that big trend. And that's what we're waiting for. We're waiting for somebody to light the torch paper under the fireworks. And sometimes somebody doesn't come along. Goldman Sachs doesn't come along and light the torch paper. This is Samir Johal, 523 points, including additional positions, £5,230 in 3 weeks. Fine, perfectly fine. Okay. I won't go into all these trades. The questions people have, other than how can I download it, don't worry. I want people to use this. Can it make money? Yes, it can. I'll show you some more in a minute. Is it easy? Yes, because actually this is what we created in-house for the new staff that I would train up in my own company. So this was to train our people. So we had to make it easy because I'm not a Goldman Sachs, so I can't hire people from Goldman's. I have to hire people who've never traded before. So I've got to train them up from scratch because they're cheaper to hire straight out of college. Yes, you are. Yes, you are. You're all overpaid by them. My staff are all over bloody paid. They get a share of profits. That's why they're overpaid. Can I do any time with a day job? Yes, I can. Because our day job isn't sitting in front of the screen trading. Our day job is to go to sovereign wealth funds, family offices, raise more capital, add to our own in the hedge fund, and launch another private equity fund, and so on. The day job for any asset manager is marketing, capital raising. Is capital raising. Okay, it's not sitting in front of the screen. I can get 13-year-olds to sit in front of a bloody screen. How much does it make? Well, I've shown you some winning trades. I'll show you some more in a second. Does it make life easier? Hell yes. Are there checklists? I'll give you the same checklist I give the new trainees in my company. I have a little manual, give them the same one. It's idiot proof, because one day an idiot's going to prove it needs to be idiot proof. That's why all these things have to be idiot proof. When you're running a business, everything, and you'll know this, some of your business owners, you know it has to be idiot proof. Okay, Stephen Wright, 114 pips, including additional positions, $1,800 in 8 hours. Stephen, not the DJ, I checked. Okay. Now notice this. He didn't get that trade at 3 in the morning. He didn't do it there. He wasn't in bloody there. But because the price was still near the entry, he could scan, see it's near the entry. Fine, he'll get in, and bosh, bosh, bosh. It went up and up and up. Okay, and that was fine. So who's behind it? I won't go to every person. All right, forget that one. There's lots of examples. Well, I'll tell you one person who's behind it. Chairman of the Chicago Board of Trade. This is in print, so you can verify this if you wish on the jacket cover of my Financial Times book. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Elucidating the methodologies of successful trading strategies. Successful trading strategies. The world's chairman of the world's largest exchange. I tell you what, there's nobody else out there who's got these kind of credentials behind the strategies. Nobody who's got this kind of endorsement. What they'll have instead is some geezer will go, yeah, I was on a BBC program once. Yeah. Or, oh, Mrs. Jones from Croydon, Mr. Smith from Manchester gave me an endorsement. I paid him a tenner to give it. No, not the chairman of the world's largest exchange saying, clearly elucidating the methodologies of successful trading strategies. Why? Because he knew it was Bill Lipshett's strategy that we were using. So I then said to me, what more do you want? They said, well, I'll tell you what you want. And I stole this idea from my alma mater, my old university. They said, if you're so bloody good, right, don't charge us anything every day, every week, every month, every year, because you don't like subscriptions. Why don't you mentor us then for life? If you're so good, we won't need to be mentored for life because we'll be profitable, won't we? But if you say to us you'll mentor us for life, then we know you've put your money where your mouth is. You're willing to do it. I said, fine, come and meet me at my office, or I'll give you mentoring through emails, videos that I've created, which will show you everything in more detail. I'll create a website for you, I said. Actually, they said, create a mentoring website for us. One person said, actually more than one, said, create a little course for us if we want to become professional fund managers. I said, okay, I'll do that. I created that. I said, it'll take you about 30 days to learn that one. And another one said, look, I'm a total novice and beginner. Create one which takes longer and isn't if I want to be professional. I just want to, learn. So I created a 12-week course for them. And it was easy to do because I got so much content and material, okay, as well. Sorry, Jay, what do you want? Let me know. And I said, I'll give you the trading manual. I'll give you regular articles, including every morning what I read in terms of the markets, and also 3 times a week, all the trades that we're doing. Okay, so you get to see those. And some people said, bloody hell, we'll use it just for that. And I said, I want you all to fill in a little questionnaire so I can make it bespoke for you. So I can say, oh, you don't know about stop losses. You don't know how to do a trading one. My team will show you how. And also, just for using the indicator, because we want this to be a global company, we want to get the word out. We want to show to the venture capitalists that we've got lots of people who've been profitable with it. I'll give you, to bribe you, I'll give you signed copies of my 2 most recent books, which is worth £50. And you get to keep those just for trying this. And what that does is it allows us to build up a big audience base, a big pool of data. We want 1,000 people to try this, but I take them in groups of 25 because I'm doing the mentoring. And at any given moment, they'll be active about who were progressing through to profitability, maybe about 100. And if I get less than 3 emails in a day, my secretary will check and she'll say, right, you can take on another batch of 25. So I take on batches of 25, have about 100 who are going through the program at any given time. The rest aren't kicked off the program. It just means they're already profitable and they don't need to be in touch. 10% give up within 30 days, and that's fine. 90% continue. Some of them are instantly profitable because they've already traded. They know how to place a trade and all the rest of it. So they just bosh, get in on it. And they will, do a trade and they'll just get on with, I don't know, euro dollar shorts or whatever else it is. And that'll make them profitable. Others are total beginners. So it takes them maybe a week, a month, maybe 2 months because they're busy with life. My point is, I think without an indicator, this is the problem we face. Okay, I'm going to show you Janet, Alexis, Howie, Tony. Don't worry, I'm going to show you how to download it. Neil, Zamir, Hitesh, I will show you all. John T, I'll show you how to download it. Give me a second. Without an indicator, it's like this. With, it's like this. This is my most famous regular person. Biku Alawali. I used to be at Barclays Bank in London, worked at Canary Wharf, left school at 16. This is what he said. And he's my favorite. I love the pipspredator because he's one of the first ones. I now spend most of my time trading and love that as a novice. I know what to trade when, how much, can leave the exit price and get on with my other work, okay? My most successful, and I want you to know this and I want you to be inspired by it. She left university and joined me in my firm as my assistant. After that, she left immediately from joining me after working for me for 3 years to join Newton Asset Management. She's now an investment manager there, managing $1 billion of assets under management. Let me say that again, $1 billion. That's my most successful. What did you think my most successful was going to be? Some actor? No, real person. Okay, and that's how good you'd expect them. Graham, I'll answer your question in a second. What I want people to do is I want them to spend 30 days, not 7, not 14, not 20, 30 whole days. Christmas is a good time because you've got a bit of extra time to do this. And you're more motivated because the bills are up, and you're more resolved because the new year's coming to make a success of trading and make more money trading. 30 days, you'll get my personal money back guarantee, no quibble. You don't have to send me your trades or anything if you don't do it, okay? You go here, you download it. There's a one-off fee. That's it. The first 25 only because I'm doing the mentoring. Okay, that's why I've got to limit it in batches of 25. Eventually, I want 1,000 to have gone through it. We've had about 650 go through the program so far. Okay, when I get to 1,000, we'll get the venture capitalists at a valuation of 30 million into the company. And then what I want everybody who gets this is to be part of that IPO journey. We want to float it next year on the market. And what I ideally want in an ideal world is everybody who's part of this to also have free shares in the company. That's what I want. I've got to speak to the lawyers about that last bit about free shares. It's a one-off cost, Jonathan. It's not a subscription, no daily, monthly cost. Culvia, there is no upgrade cost. There's upgrades are free. We're on version 4. You don't pay anything extra for the course, for the lifetime mentoring. You got me mentoring you for life. You don't pay anything for that. I'll show you in a second. Let me show you now. Yes, it works on Mac, Matthew. It works on Mac. There we go. Peter, yes, you can use it on other currencies, equities, and so on. Lifetime mentoring is from me personally. For the first 1,000 people, you're going to be part of that initial group. It'll always be me. Always be me. There will be never any other upsells or any other costs or anything like that. In future, what the venture capitalists want is they want it to be £2,000 a year for the software, £2,000 a year for the mentoring, okay? Because they think they're incredibly lucrative, valuable, and they want a subscription model. For the moment, I'm arguing with them about that. It's always going to be for you one-off flat fee, and that is it. A one-off flat fee, nothing more than that, okay? Always just a one-off flat fee, okay? Yes, I think I already answered. You can get Mac or PC. We've actually got people who install it. If it takes more than 10 minutes, we'll install it for you. We've got some people who are computer illiterate, so we install it for them. We've got people who are in there. The oldest person we've ever had is 90. The youngest we've had is, I think, 19. He's either 18 or 19. Okay. US dollars 1,300 or euros 1,130. There you go. If you are a company in the EU, you should be able to get VAT back. If you are a regular person in the EU, you've got to pay VAT. If you're outside the EU, you don't have to pay VAT. PayPal, you can use American Express. If you're using, you've got to go through PayPal. Otherwise, MasterCard, Visa's all there. You don't need PayPal to use PayPal, by the way. I know it sounds odd, but that's the way it is. You put down your company, your country, and you go through there, and that's it. And look at this, okay? Our payment processor is Monic. Some of you might know it's a massive, massive company, and your data padlock is secure, so don't worry. All data is secure. We don't store any of your details, and similarly, like I said, you can pay through PayPal as well. We don't store any data at all about your so payment processing is done by Monic. I want you to know that, not obviously done by us. Third party does it. Okay, the other thing I want you to know, and this is really critical, we've got this wonderful community website. Oh, by the way, look, the reason I say to people, there is no messing around. That's me on the BBC, okay? When I want people to get to profitability. The more of you get to profitability, the higher the valuation this company has, the more closer we get to an IPO, the closer we get to $1 billion valuation, because we've got evidence that it should go global then. That's why I'm person behind it. That's why I take the time to push this technology, because I think it's worth $1 billion, right? You look at, and then we're going to use the public profile the way Richard Branson does on the BBC to make sure more and more people hear about it, more and more people use the technology. Now, some people go, well, surely if everybody's using it, nobody will make money. It doesn't work like that. It's $1 trillion. Look at all these products people could be trading. And let's say you, me, and George Soros happen all to be looking at the same time of day, at euro dollar, and we all decide to go short. Well, it's a trend following strategy. I want more people to go in that direction. And the more who go in the direction, the quicker it should fall and make the profits. So in actual fact, we want to spread the word because it becomes a self-fulfilling prophecy then. Until then, we've got to ride the coattails of those who are trading. Look at all these UK stocks, US stocks, Bitcoin, UK companies, US indices. The whole point is the chances are, the varieties are phenomenal. And we're going to use that public profile like all technology companies do, like Apple does, like Facebook does, in order for more people to trade it and to be using it, okay? And to turn it into more of $1 billion business. One of the things, the mentoring website that I've got, you're going to love this. By the way, you get direct access to me anyway, but there is a mentoring website. Our IT team who can help install the computer. Regular people who've written testimonials. There they are. Okay, these are regular people who've written their testimonials. We give their full name. We don't do that MC from Croydon bullshit. Okay, these are all people with their full names who've done this. Okay. We've got all that. Now, what I want all apprentices to do, when you sign up, this is some really great bonuses. What I want you guys to do is visit me at 84 Brook Street in Mayfair, our offices. You've got my phone numbers. You've got Skype number. So you've got direct access to me through Skype, through telephone. If you're from Hong Kong, there's a dedicated number for you because we've got a lot of people from Hong Kong. We've got a lot of people from Australia. We've got a lot of people from the US. Obviously, UK, we get 80% of the people. So come to there. And also, to prove to you I'm the real deal, all apprentices, link up with me on LinkedIn, which is free. It's a network which will show you I'm the real deal because you'll see I'm endorsed by not just the governor of the Bank of England and Bill Clinton and Prince Charles and all the rest of it, but the CEO of Barclays Bank. So you'll know it's the real deal. You'll see the other roles I have with 10 Downing Street and what my hedge fund does and the asset management side of the stuff we do and so on. Okay, so you'll see all of that, it's the real deal. But also, all apprentices, I'm here to mentor you. I'm the co-founder of the UK's largest entrepreneur mentoring organization. It's called TIE, the Indus Entrepreneurs, TIE. Started out of Silicon Valley. I opened the UK chapter, which is the second largest chapter globally. So I know about mentoring. And it was founded in the US by the founders of Sun Microsystems and Hotmail, Vinod Khosla basically, and Sabir Bhatia. And then I started the UK chapter, co-founded the UK chapter. Okay, so mentoring, I know about, because I'm your mentor. When you're on LinkedIn, I will make sure, okay, Kiran, you are through. So is Kevin. Matt, yours has gone through. I'm excited. Joseph, and thank you. My passion, yeah, I love it. And your payment's gone through. Vladimir is Mr. Putin. You're watching. Vladimir, it's gone through. Don't refresh the screen. It has gone through. Don't worry. Tony, try again. Try on the try on PayPal if it's not going through Dylan, because there are some licenses left. So don't worry. Okay. The reason I restricted to 25, Michelle, is because I'm doing hands-on mentoring. Okay, that's why. Batches of 25. People got confused once. They said, oh, you've only got 25. Why do you only have 25? No, it's not that I've only got 25. I do it in batches of 25. Okay. We've got a community website. This is our club of traders. All right. You can post any questions. You can search any issue, or you can just email me. All right. And on this, you'll see my latest views as well. So you'll see what trades we're placing during the week. All right, and you'll be able to see that 3 times a week. We'll show you all the trades we're placing. Now, we've got some Americans who wanted us to put some US stocks, but we'll also do currencies, US stocks, everything. So you can actually learn through this method, but it gets better. The real way I want you to learn, not just through the community site, which is like a help desk site as well, because you can search things, you can ask questions, and you get my monthly newsletters. But also, we created the 30-day course. It takes as long as you want. It's part of it. You can do it for the rest of your life because you've got mentoring from me for life and direct access to me for life, because my job is to make you profitable. Are you listening? My job is to make you bloody profitable, right? Through this very modular basis. I did all these videos, made them bite-sized, 5 minutes, 2 minutes, 4 minutes. People love this because they're always progressing. They get a certificate at the end. One person asked, does this education count towards them getting professional qualification as a hedge fund? Yes, it does, because the way the FCA does it now is they want to see what qualifications you've got. Since I'm a professional hedge fund manager regulated by the FCA, this would count towards that. Some people get it for their kids. They say, look, I want you to learn about trading and so on. Others, they use it for 30 days and ask for their money back. Look, I don't care. That's up to you. They keep the books. Where have we got? Michelle, it's gone through now. Thank you very much. Alexi, yours has gone through. Ray, yours has gone through as well. Who else have I got? I've got Gordo, and I've got Petra. I love the city of Petra in Jordan, by the way. Anyway, module 2, module 3. I think using the algorithms, the indicator, and the training. Some people don't want training. They say, listen, Alpesh, I only need the software. They say, oh, Alpesh, can I just use the software and not the training? Others do it the other way around. They say, can I just have your mentoring and not the indicator? And I say, look, it's all one parcel. In future, it'll be £2,000 a year. Not for you guys. It's a one-off fee for you, but it'll be £2,000 a year for the indicator, £2,000 a year for the trading. And then what we did is, with this, is on top of that, I thought, you know what? What I want to do is I want people to learn through not just that, but also learn even in more basic terms. So if you're a total beginner at the opposite end, I created a 12-week course for them on my website. All right. And some people said, Alpesh, I don't want to do all of this. Too much hard work. I said, you don't have to. You can just use the software and the manual if you want. Okay. All right. I said you could just use the software and manual. I got a question from someone about what have I got a question about? I got a question about oh, they've asked about platinum. They said they were a long-term buyer of platinum. Okay, can I look at the daily charts? I will put up the daily chart. Where's it gone on platinum? Let's have a look at the daily chart. Okay, there you go. Our daily trend on platinum since the end of November, start of December, has been short. There you go. There's the trend. So if you're a long term, you might actually use this indicator to augment your own analysis. Some people use it alongside their own to supplement it, to decide whether or not they should do it. So yeah, there's different ways of doing it. Okay, Louise. Yes, Louise, you want to know about what? You've been short on Disney. Louise always tends to copy my trades during the, let me just go back to the Disney trade. Where is it? Disney. There's the Disney trade. Well, congratulations to you, Louise. Well done. I don't know how long we're going to be short on it, but at the moment you've seen that the markets are taking a bit of a hit. So I couldn't tell you how long we're going to be short on it. Louise, but there you are. Somebody wanted to know Apple. That's still short. That's still short, as I said earlier. Okay, so listen, guys, you download through there. It incorporates, you can see why we've moved to this space. You can see why we wanted it to be a technology to get out there. Oh, by the way, what we do on the 12-week course is Saturday webinars. So tomorrow, there'll be live webinars. If you can't make it, don't worry. You can... there's recordings. 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, 4 o'clock on adding to winners. And so you've always got that opportunity to access me through those. Only for apprentices, I'm afraid, my friend. Douglas, only for apprentices. Okay. There we go. And the other way we accelerated people's trading wasn't just through the Saturday webinars, but we gave them a bespoke mentoring questionnaire, which I devised using Google. My cousin works at Google, and he said, look, why don't you use Google Forms to ask every single individual person their specific area? So then it becomes bespoke to you. So I'm like your personal trainer, and then I know, okay, what your experience is, your expertise, what you find difficult, what you find easy. So I can say, look, focus on this, don't do this, don't do that. Now, that was critical. What we also found help people. Some people like videos, some people like audio, some people like to read. So I created a bunch of cheat sheets as well. Okay, and what these cheat sheets did was told you even everything from the basics, how to set up the screen, look at it, to how to place a trade. Sandeep, I will check if yours came through. I problems at the moment. I know sometimes the payment processing can be a little bit odd. Robbie, yours did come through, Robbie. Oh, okay. Okay, let me just check. There we go. And I should be able to get back to you in 1 second, whether it got through or not. Okay, and so the cheat sheets. See, the idea is, however you want to learn, some people want to email me and learn, some want to watch videos at 3 in the morning, and that's fine because you can do this anytime you want. No, all upgrades are in there. Everything that I've answered in this webinar, such as how much money to put into a trade, when to enter a trade, when to double, all of that's in there, but you've always got me as a backstop. You've got all the videos, little videos in there as well, and all the cheat sheets and all of this. It was only by doing it that way. It was only by doing it that way, by giving people lots of choice how they want to learn, and actually meeting me as well if they want. I've got to meet another apprentice straight after this. And I love that, because when you meet them, that's when you realize, that's when you see, okay, when you meet them is when you see that, yeah, people are really committed, they're really successful, they're brilliant. Through that way. Okay, Sandeep, I'll just check. Yes, it's gone through, Sandeep. So don't reprocess. It's most definitely gone through, my friends. My friend, rather. Okay, so I want to make sure you know it's gone through as well on that. Look, what I want is people to be part of this journey. My job is to get you to be profitable, and I want you to be part of my journey on getting this to IPO. I want all the people who are apprentices to track the business part of it, okay, and be those apprentices who then turn around and say, oh, okay, we've seen how we've gone from a technology into building a unicorn business. Apple, yes, it's approaching the lowest it's been through the webinar. It's going lower and lower. There you go. So that was the short, and you can see it dropping further. And I can see through these, we keep these little traffic light indicators just to give me a sense, a flavor of how things are. I can see that quite a lot of pressure downwards. Only the MACD is holding up. That's why it might be a little bit slow going lower, but those others are going to outweigh it. There you go. And it's falling lower. I mean, look, it's happening right in front of your eyes. I can't do better than that, can I? Okay, it happens right in front of your eyes, and that's the point of it. It allows us to be in that position to do that. And I want it to go the lowest it's been. So we're going to come back to it. I want it to go the lowest it's been during this webinar, because then I guess there's no better proof than something actually happening in front of you. So yeah, is there any question I haven't answered? Is anybody on the edge who wants me to email them and give them something which will take them over the edge, as it were, and make them, you know, if anybody's edging, let me know. Sorry for signing. Anyway, I won't go into that. But yeah, if any of you are unsure, let me know, because I think we've got a technology where nobody should be unsure. And I think this is, like I've explained, the way trading is moving. And if you're not going this way, you're getting screwed. And you don't know it, because private investors are always the last to ever bloody find out. If I was going to, by the way, sum up the value proposition, somebody once said, what's the value proposition? There's no other fees ever. Okay, we're on upgrade number 4. You get our trades 3 times a week. We never used to do that. We absorb the cost of that. Okay. There's no daily, weekly, monthly, or annual fees ever. You keep 100% of your profits, right? Because I don't want to dip into your pockets. I don't want you to be screen slaves either. Okay. It's me personally doing the mentoring. People ask, how do you do it? Yesterday, I got a wonderful chap, Andy. He said to me at 11:15, oh my God, I'm so impressed. You messaged me back. I said, of course I messaged you back. I'm on my phone. Why wouldn't I be on my phone? I'm looking at the markets or something. We've all got these. I could not have done this even 3 years ago, because 3 years ago, without a really sophisticated cell phone, which we're all addicted to, I couldn't have been able to mentor people if they've got questions. It's because I've got the cell phone. This evening, I'll be out with friends having dinner, and then I'll be in the cinema. And guess what? If I feel like it, I'll go, oh, I'll just answer that, because it's fun. I love it, because if you're profitable, I'm profitable. Why? Because for every profitable person, we've modeled the business that it's worth about £100,000 to the company. No, you can't have £100,000 when you're profitable. Earn your own. Okay, earn your own. Little dedicated website videos. Like I said, in the course, there's 6 webinars each Saturday. So this weekend, which is, like I said, December's great. People are really motivated. When you're motivated, you're more likely to succeed. 12-week online course, access to me, like I said, daily email pre-market briefing, pre-trading assessment. I got more stuff than people can handle. Why do we give them so much stuff? Because then they can say, I don't want to do it this way, I want to do it this way. Graham, Alpesh, love the look of the indicators and system. I haven't retired, love trading and tech analysis, fine. Given the fractal nature of markets, how well do your tools perform the shorter time frame? Oh, great question, Graham. Graham, we do look at 1 minute and 5 minute if you really wish, okay? The reason I don't think it's worth your time is this. Okay, on a 1 minute bar, you're going to get a trend and then it's going to reverse, isn't it? Okay, it's going to reverse so quickly that the size of the trend is always going to be small. So you're going to make really minuscule sums of money, but you're going to spend a lot of time because obviously there's going to be lots of signals on the 1 minute. That's why I don't recommend it. Your return on time, as I said really early on, restricts it. It works on those timeframes. It's just that it's not a lucrative timeframe to trade. Let me put it this way. Let's go to the other extreme. What if I said to you, look at the 10-year timeframe? You'd say, Alpesh. And I said, it works. I said, what? Come back to you in 300 years. And that's the problem. So whilst you can do it on the 1 minute time frame, the reason I don't recommend it is for the reasons that I've just stated. Let me just show you. Let's show cable because it's the most. So there's cable. All right, there you go. There's the 1 minute time frame of cable. We've got a short on it right now, and it's happened live on air. All right, there's the long. Went sideways for a while, then it shot up. Okay, so the fireworks were laid there. Somebody at some point today decided to light a match, and it's gone explosive. Now, I haven't followed the news today of what that cause was. Okay, could be the Bank of England. Who knows? Right now, it's got a sell-off, and it's short. We've got the short signal. Right now, that is the 1 minute chart, and that's fine. So, oh, that's great. I'll just sit there doing that. But do you know what you're going to do? And I wrote an article about this in the Financial Times, my friend. What you're going to end up doing is you're going to end up per hour earning less than a guy working at McDonald's. That's what's going to happen because you're going to become a screen slave. So that's the only thing. Anthony did. Whoops. Whoa. My fat fingers. Talk about really fat fingers. Okay, let's just go to where we were. Anthony, let me just make sure it went through. Talk about summary. There we go. Okay. Anthony. Yes, it did, Anthony. Thank you very much. It did indeed. Roy, I think, and Alexander and Christopher, if I haven't mentioned you guys as well, those have just gone and shown up on the dashboard as well. Okay, so I think we've got none left. So if it doesn't go through now, if anybody tries, I don't think we've got. Actually, no. I've just been told. I think we've got a couple left anyway. Okay, just try it. You'll find out. Okay, it'll reject you if we've run out of licenses. Okay, so I asked people, what are the key factors that are important to you? And they said, well, we really like the fact since and download, we can get on with trading straight away, including tonight. And Graham might start trading sterling, might start trading cable. There you go, Graham. That one's just for you. Cable, live on air, like I said, and it's dipping back a bit. And there was the sell signal. You can sell it now. Louise will. She always does. Oh, that red line, just ignore it. It's just to show us where the peaks and the lowest point was. Just put it on there for another thing, separate thing that I was speaking to another apprentice about. Okay, there it is. You can see. Oh, go on, son, get in there. There you go. Lowest it's been. Go on. Yes, there you go. All right. So there you go, Graham. Does it work on the 1 minute? I can't do better than that. I just showed you it working. I mean, we haven't got an exit yet, but we'll come back to all of those as well. I think somebody wanted to see Apple, didn't they? Oh yes, I said, well, with Apple, I want it to be the lowest it's been for the webinar. There you go. Lowest it's been. It's broken low. It's gone down below. So those people who are trading live on what I do, there you go. There it is. And that's the point of it. Now you might say, wow, you know what happens? You might say, how come you're not worth $1 billion? I agree. I should be. There's two ways we're going to do it. Using this technology, when we show asset managers, when we show investors into our hedge fund, they go, fine. So how come they haven't all given us billions? Well, first of all, sometimes the people we speak to don't have billions to give. Sometimes we come in after Goldman Sachs. You know what they do, even though they see this? That's all right, Alpesh. We're going to give our money to Goldman Sachs because you know what? Goldman's nobody ever got sacked losing. And sometimes I do this live with them. So I'll speak to an ultra high net worth or a family office. I'll go in if it's going to be a big one and show this live. And they'll go, yeah, I'm going to go with Goldman Sachs though, because my advisor said, go with Goldman's. Nobody ever got sacked buying IBM. That's their principle. Why else aren't I a billionaire? We haven't IPO'd yet. Give me a year. Give me 2, and we will be. That's the ambition. Anybody in business, nobody, don't piss around with your life's dreams and ambitions. Shoot for the stars. You might, or what is it? Shoot for the moon. You might end up amongst the stars. That kind of principle. And, you know, and I want to see this technology company do this. From our private equity fund, we've had companies do incredibly well. Anybody who knows what I do with the UK government knows we've had some really good, we've had unicorns, we've had billion-dollar companies come up. Okay, so we're just applying the same principle of what I've got a track record doing. By the way, in case people don't know, I'm one of the British government's deal makers. My job is to assist companies become billion-dollar companies in technology. So the British government has me doing it for them. People who know me from trading don't actually know that. Sandeep, recommended broker platforms. I'm going to email you. Yes, IG are fine. Basically, what I mean by fine is I'm going to steal your money, but their spreads are sometimes wide. They sometimes trade against you. I'm going to email all of you, whether you're apprentices or not, the brokers that I use. Okay. So people said, I want instant down. I want a regulated hedge fund manager because then I want somebody who's paid by the Financial Times, right? Paid by Bloomberg because those are reputable sources. I'm an Oxford University fellow, a lecturer on behavioral finance. I do a lecture once a year. There's no repeat or subscription cost, no hotel or travel cost, none of that bullshit. You've got me as a mentor for life. You're paying a one-off fee because I want to build it up to that first 1,000 people. That's why I do that. You're all going to get signed copies, apprentices, of my 2 most recent books. I'm going to go now because I want to go straight to my apprentices now. Okay, and I think everyone's had ample opportunity to get it if they want. Okay, apprentices, I'm going to email you in a minute. I'm going to email you in a minute, so don't worry. I'm going to email you all apprentices in a minute. What do you want to know? What do you all want to know? What do you all want to know? George, in case you want to know about sterling, there you go. Cable, it's got a bit lower. All right. And what was it? Apple. Apple. Come on, Alpesh, find Apple. Where it is. There's your Apple. Oh, it's going even lower. Well, I wish you a Merry Christmas because you've all been very good to me because the trade we had on Apple has the lowest point it's been. We've made quite a bit on that during this webinar. So thank you all for my Christmas gift. And for those of you who are getting the indicator, downloading it, and about to start trading, yeah, you might want to take a picture of this screen and these time frames. Start off with these, and then let's talk when you get to the other side. And we'll start this afternoon with you, if you wish, or whenever you want. We can start whenever you want, whenever you feel the urge to start trading. You might do it after Christmas. Oh, FTSE. Let me stick the 4 hour on. Slightly longer term FTSE. There you go. That's the FTSE. Emad, not sure about joining because I've seen. So okay, entirely up to you, Emad. Entirely up to you. I don't think you've ever seen somebody with my credentials, though. So entirely up to you, my friend. But let me know if any of you are unsure, and I'll drop you an email, which will take you over the edge. Okay. And that's it. That's it. So I'll give you the two books, 30-day money-back guarantee, no quill money-back guarantee, but my signed copies of my books to keep regardless. So, Ahmad, even if you change your mind within 30 days, you get to keep the books, the USBs. There's a whole bunch of goodies, actually, to do with trading, which come with that as well. You're part of the trading club, dedicated website, all the rest of it. So, but thank you, Ahmad, for being honest as well. I know all these other people have really buggered it up. I tell you what's happened. Let's talk about that, Emma. Let's talk about these educators, okay? And if people don't want to listen to this bit of it, they don't have to. Brokers, I'm going to send you all the email. Okay, let's go. Let's just talk about. There must be a quicker way of doing this, I'm sure. Oh no, there it is. I'll show you the quicker way. Okay, there it is. Right, let's just talk about. This is the problem. Anybody charges you more than 1,500 quid, right? They're trying to do more than cover costs, right? What we charge covers costs. Imagine all the costs that have gone into this. All right. Do they charge subscription? Don't trust them, Emad. Are they FC regulated as a hedge fund manager, not as a newsletter writer? Because they should be. If they're any good, they should be. They should have a fund that they're managing, because that makes far more money than anything else. I'll tell you why. A fund charges 2% of assets under management each year. So in our fund, we make several million each year for doing nothing. Yeah, I'm sorry, it's the truth. And we get 20% of the profits. That's why having a fund is the most lucrative thing. But if you haven't got a fund, why haven't you got a fund? That's what you got to ask these people, Emad. Do they have their own TV show? Because if they're really good, they're going to be offered TV shows where they're paid, not occasional appearances. Okay, and like I said to you earlier, if it's an institute, university, school, or college, bullshit. Anybody who's any good doesn't need to big themselves up with fake names like that. Do they offer a classroom course? Because if they do, that's bullshit. It should be really that the ability to teach you should be the ability to teach you in the convenience of your own home at any time you want. If they're going to force you to use their own broker, you're being screwed. Have they won awards from a reputable brand like the Financial Times? Not for education, but for trading. Emad, have you ever seen anybody do that ticks all of these boxes? Lifetime mentoring without any charge, claim to be right 90% of the time, don't trust them. If they claim to be right 90% of the time, don't trust them. Have you met anybody who ticks all these boxes? Ever? Let me know if you have. I want to hear a name. There never will be a name, because there's nobody who ticks all of those boxes. Okay, I do, obviously, because that's how we created it. Because when we realized we tick these boxes, we've got $1 billion business. That's how you realize you got $1 billion. How do you realize you got $1 billion business with an iPhone? When you realize, you look at it and think, bloody hell, we've got $1 billion business here. That was it. Now, the way we're going to do it is the same way Google did, float the company. Float the company. That's the way. And using this, part of this technology was created because when we went to pension funds to show them, when we went to family offices to get the capital in, they wanted to see it. So we said, well, let's make it mobile. Let's actually show them, right? And that's what helped us raise the capital and the money in, more and more capital in. How we went from 0 to 90 million euros in 10 years, and I think hopefully $1 billion in the next 10 years. Now we're competing when we go in with Goldman. So I've got friends at Goldman who'll say, oh, you buggers are going. Now, obviously, they get the lion's share, but occasionally we get $1 million here, $1 million there, $1 million here, $1 million there. Great, fine. Okay, guys, I'm going to go because I'm going to just deal with the apprentices. Emad, I will email you or anybody else. And all apprentices, I'll email you as well. Anybody who's unsure, let me know as well, and I will send you an email which will take you over the edge and will make you most definitely very sure as well. A very convincing email, okay, that you're going to receive, which will make it a total no-brainer. All right, it'll be a nice little surprise, and it'll be a nice little no-brainer once you see that. Okay, thanks everyone. Apprentices, I am going to send you an email. Give me about 5 seconds just to double check some of the trades, just to make sure that my assistant is staring at me, has done everything I wanted to do. There's the Amazon one, by the way, from earlier on. Philip, I think you wanted to see that, didn't you? Because I talked about Amazon. And I said I like to short. Well, there you go. It's the lowest it's been. And it's great. The markets at the moment, I think it's going to be the same thing throughout the rest of December and into the new year, are going to continue making some of these bigger, wilder moves. But the reason we need to use this kind of technology is because the moves, as you've seen today, it can be short, then long, short, then long. The trend periods have reduced, and that's why I think the 1 hour time frame has been the best as well. Okay. What else can I tell you? What else can I tell you, friends? That's it, really. I think that's everything. I'm just trying to go through everything in case I've missed anything. That's it. That's it. Thank you all very much for being on the webinar. Listen, apprentices, here's to making money in 2019. I don't want to say, that's what David Kite said to me. We're here to make money. I know it sounds crass, but we're here to make money. I hope you give it all away to charity. I hope you do good deeds with the money that you make. Good for you. Don't tell anybody when you give it away to charity, because that's just crass. But do give it away. But we are here to make money. That has got to be the reason we're here, because then we can do something useful and noble with it. So 2019, apprentices, that's my goal, to make you lots of money, because if you make money, my company and technology makes money. 30-day no-call money-back guarantee as well, because I don't want anybody ever to be dissatisfied. You're going to get signed copies of my 2 most recent books, which means you'll be happy. Everybody has to leave happy, happy, happy. That's a simple rule. Okay, thank you all very much indeed.